Good morning and good afternoon here in London, and welcome to another live stream, the Mohawk Forex scalping team. And today is Good News Day. This is the pre-runner up to NFP week, which obviously is on Friday, and looking at the US30 and gold today. We'll have a quick look back on DAX because we had some really good scalps on DAX this morning as well with all the European news. What we've got coming up is the ADP employment change December figures, which is really a good pre-indicator to the NFP and a great one to trade. And as it's pre-NY Open, we trade the reverse, of course, using our AX system. Got my coffee, we're all ready to go. So we're 10 minutes away from that, and for anyone who doesn't know anything about it, you can click on my FX book. I'm registered to, there's loads of sites out there give you all the necessary information, but a higher than expected figure is positive for the dollar, lower is negative, and obviously we ignore that and go the opposite way and trade the manipulation that comes out with this news event. And then once the NY opens in 90 minutes time, then we'll trade the way off it, depending on the result and how strong the figure is. Obviously it's going to be down. Looking at the figure being 400k as a general consensus over 534k last in the previous month before that. So already kind of a bearish sentiments costed into the market, or will be. So we'll see what the result is. And obviously gold is our favorite to trade on this, because gold, we like to go the way of the news. We don't go against it like you would normally. So we'll trade gold in the direction of this news event. US30 will trade, but it'll be really slow because obviously the market's not fully open, liquid yet, but you can still get the odd nice win, and we do on that one, but you might have to wait a bit longer. But with gold we should be able to get in and out pretty quick. And then, like I say, then we've got the NY Open, and then we've got the December figures for the market composite and market services, which are high impact again, looking both to the downside. Again, we'll trade that the way of the news result. And then 45 minutes after that, we've got our favorite, one of our favorites, the EIA crude oil stocks change for this week, which we successfully bagged about $200 on the one last night, and now this is the EIA stock change one. Obviously with oil being in the news, OPEC releasing 400,000 barrels a day now extra production. This hopefully will be a good result for us. And then later on tonight, for those of you who love dangerous scalping, as I call it, you've got the FOMC minutes, the Fed minutes talking, which some people like to scalp as is going on. Very exciting, very dangerous, but can be profitable. So we've got a packed session here. Let's have a quick catch up where we are on US30 at the moment. You can see we've had a real good bull run. Pulled back a little bit, and we're in a range at the moment pending the news. We're in the neutral zone here, so that's all cool. Gold, going to be looking out for the initial trade, has pulled up again to peaked at 1820 before dropping back down again to 1817, so kind of in a range. You can see there our top and bottom of our range indicator, our breakout zone, as you can see. Gold is in there, so break below or break above suggests a heavy move one direction. At the moment we're in a buy territory. We just broke out of our RSI and we're jumping up to our heavy resistance zone here. Obviously if price sits here, are we to get 5 pips or so on gold, would be enough to kick us off this afternoon. Let's post this ADP news coming. See, we'll just have Bloomberg on in the background.
They still require a PCR test to get back into the office.
And part of it is because the communication has been so confusing from the CDC, basically saying if you have a test, go ahead and take it after 5 days. If you don't, it's okay.
We've got 6 minutes to the news. Let's listen to that.
It's not necessarily engendering confidence.
Let's have a look at investing.com. Latest news. I've already checked in on this today.
Just to bring it up again, look, we're all living with
US futures, Fed minutes in focus. Obviously ADP Hong Kong. Here we go. What's moving the markets? Here's all your news you should be studying and looking at. So second of the week's big labour releases, yeah, in say 4 or 5 minutes time.
Never mind COVID.
Expect a gain of 400,000 jobs, which is a slowdown from recorded in November, the lowest in 4 months, but still reasonably strong months. So it can be taken as good news in a way, but we go with the way of it. Read what you want into this manipulation. So we're getting ready for jobless claims on Thursday, and obviously the on-farm payrolls on Friday. Hong Kong's we heard, China tightening their curbs, banning the UK today from travelling. Stocks set to open lower, so they're saying fuel protests in Kazakhstan, and Goldman Sachs obviously saying Bitcoin could hit 100k. We'll wait to see on that. Would be really nice. So there's all your news.
Rotation, but this really will be one of the key questions.
The S&P at the close yesterday, 47.93.
See, we trading all
forward look from the likes of Credit Suisse, 5,200 year end on the S&P 500. Joining us now from Credit Suisse, a senior equity strategist, Patrick Palfrey. Patrick, I want to start with the
a few more people join us. Nice.
But also the upside you see on margins. Now, Patrick, many people thought that would be a challenged point of view through much of last year. Wasn't a story. Why do you still hold that optimism for 22?
Next day we're going to be looking at
for 2022. We're looking
5 minutes to go. DAX this morning was great, and we traded a lot of this.
There's two things which
bought all these buys here, which is a great
and we have an economic backdrop
session.
Where nominal GDP is expected to be 7%, and in that environment, profits
all the buys
very strongly. Margins continue to be very accretive, particularly for cyclical groups. And we're looking for a little bit of multiple expansion, nothing more than a half a turn, and that's how we get to 5,200. This is not a multiple-driven story.
So easy this morning.
Sustainable to move towards
you're up a good few $100 things.
Patrick, you have the highest marks for not only the way Credit Suisse developed a bull case, but the intelligence of it to say, don't abandon tech. Can you abandon tech this year and still perform, or do you have to stay on board technology shares?
Trades.
Well, so I think you need to look at it from two different perspectives. On an absolute basis, I think tech still is up, but it struggles throughout the year as potentially
sell there.
Higher. That said,
I better sell here.
They're going to be probably a bigger laggard. So tech is still going to be a positive contributor to the return.
Again, when it came back the RSI over again, another buyer there.
In other players like
Ray.
And tech is probably going to be a
could have gone back in on
still positive.
Buy again here. Cheeky little one up.
Patrick, at 2 p.m. today, we're
red wouldn't have occurred because now you've got hidden
John and I were walking through
bullish divergence as well appearing. Remember, I count 5 candles.
So
from 1, 2, 3, 4, 5. So this could be a buy as well.
So I think the yield curve
there were the trades.
The biggest conversation for this coming year. I know a lot of people are focused on inflation, and that's important because typically inflation is a big input into the long end of the curve. But what we're seeing though right now is inflation expectations are elevated, but the 10-year remains well contained. So we have the short end rising as the Fed tightens policy, and that's putting pressure on the curve.
Countdown, but 3 minutes to go.
The curve is going to ultimately dictate where the call is going to be this year, and that's really where we're focused. Now, right now, if the curve flattens, I think it's still okay because we still have a positive earnings backdrop. But if it meaningfully gets flatter because of Fed tightening, I think it could be problematic and really cause us to really reevaluate our call.
So we're going to try and trade the results on this, whatever the nice pullback on US30. Could bounce on our trend line back up to our breakout zone or hit at the bottom of our breakout zone here. We'll wait and see.
They'll say this is just a removal of accommodation by the Federal Reserve. The bears will say this is a tightening of policy by the Federal Reserve. Patrick, that's more than just words. What's the difference between the two? A removal of accommodation and a tightening from this Federal Reserve?
Well, to be a removal of accommodation is acknowledging that we're moving into the middle innings of the economic cycle. We have properly moved past the trough in the economic activity, and we're moving towards something that is more sustainable and needs less support from the Fed. So that's the removal of accommodation. If you're talking about tightening, that's the point.
1 minute to go, 2 minutes to go, the countdown.
Just
to make sure we've got gold. As you see, look, gold there broke. Trying to break our heavy resistance zone here at the top. Looking back up. Double top in, back up to 1820. Interesting to see what this result does to gold.
Rather than economic
Not sure On it? Yeah, we're on.
Patrick, what do the quants say right now when you look at the cross moments of the markets? The VIX is driven profoundly.
See if we can get that magical $500.
Subdued volatility. Do we get a true bull market?
Nice. Let's
VIX
see.
of 15 or 14.
Countdown.
What do the quants say right now?
We'll
I think
report
it's very
it.
likely that as we move through the year, we're going to see
Doing.
volatility start to dip below 15.
Use a lot of crypto.
What
Slightly
has
pull
really
back a
helped
little bit.
markets really in late December was
Good.
the fact that the VIX did
This
start
way
to
up.
normalize back towards this mid-teen level, and that's really a big driver of equity upside. And we think that's part of the call.
We've got about 1 minute to go.
The VIX is still
All the
gonna continue to
news.
fall. I don't think we're going to get quite
And then there
as
should be
far
some
as we were
gentle
in
scalping
the high single digits, very low double
up till
digits,
the
but I think we
open.
can start to move towards a low to mid-teen level, and that's going
An
to
hour.
further equity upside, particularly for the cyclical groups which benefit from that fall.
Credit Suisse at 5,200 year end on the S&P. Patrick Palfrey of Credit Suisse. Patrick, thank you, sir. 5,200 at Credit Suisse, 5,250 at Deutsche Bank, 5,300 at BMO, 5,330 at Oppenheimer. TK, they're the big balls on the street.
30 seconds to go. Good luck, everybody.
I'm glad you mentioned that, John, because I've been out of touch here a little bit, and I didn't realize we were out nicely to 5,200, 5,300 from some of the bull market case. You wonder how the bears regroup. John, I'm really interested off of the jobs report in Ellen Zentner's work on Friday, how Mike Wilson recalibrates.
I understand Ellen's looking for 260 on Friday, Tom. The median estimate is 424. The difference between, say, Morgan Stanley and Credit Suisse right now, there are many.
Ooh, way better than expected.
Credit
Nice,
Suisse
nice, nice.
Morgan Stanley at 4,400.
Nice result.
They say this is a removal of accommodation.
Making some buys.
Speak to Morgan Stanley, Lisa. They'll tell you tapering's time.
Sells.
Well, and really
Information's on that, so that's a great ADP. And again, I don't tend to set too much on the targets on this.
But how much does the balance
how the
sheet
manipulation
really
works.
throw a wrench in some of these projections? And I know that I'm just, a stereotype of being and trying to look around the corners to all of the bearish places that we could possibly go. But this is the one that I keep hearing that really stands out to me. Balance sheet reduction changes
green,
the scenario
take the green.
with a less controlled impact on markets than, say, rate hikes, and frankly, a less understood one. So any discussion of that could be a risk scenario that I wonder.
Gold, brilliant. We just bagged $200.
Lisa, do you think we've got
That,
comfortable
beautiful.
with the old timeline, the type line in the previous
Gold,
cycle?
we went for the
And
buy.
there's a pretty good indication right now that that is not going to be the timeline.
Close my
used
trades on that.
for this timeline. And
Nice
I don't
and
think the
easy.
timeline of
Spiked
sequencing
down,
may
but
be
spiked
altered
up.
to sequencing as well for policy. Chairman Powell opened that conversation up, I think, in a significant way in the last news conference.
Perfect.
And I think that you're pointing to Neil Kashkari, the key dove from
There was
Minneapolis
the
on the Federal Reserve,
piece.
is talking about 2 rate hikes and the balance of risks tilted a little bit more to
It's
inflation
dropping, but watch
and
the bounce
perhaps
back. We'll get some more
undershooting
buys on
highlights
this.
How much that's
Perfect.
shifting.
President Kashkari, the costs of ending up in the high inflation regime are likely larger than the costs of ending up back in the low inflation regime. The Fed dove sounding a little bit different. Equity futures down 7 on the S&P from New York City with Tom Keane and Lisa Brown.
Watch
Jonathan
US30.
Ferro. This is Bloomberg Surveillance.
So we actually got 56. We got $200 on that.
North Korea appears to have
Bagged
launched another
already.
ballistic missile. It originated on land and traveled into waters off the nation's east coast, according to South Korea's military. Officials in Tokyo say the missile landed in waters outside of Japan.
We're going for 500, like I say. So there's the first 200 bagged. Check US30.
Food shortages and containing
Again,
COVID-19.
you see the manipulation. This is why we go the reverse. We're looking sell on US30 here. Look.
The bad debt manager says it has taken steps to return to its core business after raising more than $6 billion in a state-led bailout. Hwarong's shares were suspended last April following a delay in its 2020 results.
Watch that push
new
down.
Prime Minister Kirill Petkov redoubled the government's commitment to adopt the euro in 2 years in the face of fragile support amongst voters battered by the force of the pandemic. He tells Bloomberg that a transition from Bulgaria's lev to the euro might be treated with care and requires a
Let's
full
see,
step
because we're below our baseline as well. RSI is red at the moment. Like I say, US30, you don't always have to trade it because it can always manipulate against you like this. So it's going the way of the news at the moment, but it'll pull back down again. The gold is the one to trade on all these reverses. Really, really good. That initial spiral up, then it drops. And we'll just catch the buy back again. Drop out for. It's great. I love trading the reverse.
This is Bloomberg.
Might be back in on gold. If it hits our breakout zone, wait for the RSI to curl. Don't do anything while it's dropping like this. We're going on a sell even if it breaks here, which we will, you know, it's fine. US30 is neutral, look. Back. Watch. In. There was the drop, look at that, you see, on the US30, look, beautiful, you see. Spike down, okay. There was the TP. Proved that there is manipulation, you see, and when to go with the news and when to go against it. The whole point of teaching people. So there was the release. Bottom of that candle, get 168 point, even with spread. So that was a nice sell.
Protesters breached the Capitol.
Democracy has prevailed.
A flash mob decided to take on the short.
Giant container ship blocking the Suez Canal.
1,000 new types of crypto coins.
Crackdown on tech in China. The billionaire space race.
Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
Withdrawal of U.S. forces from Afghanistan.
Did not get everybody out.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global rush.
Gold crashing down after that initial spike up.
And this is specific to China. Why is this the top one?
Now we can take a sell on neutral support at the moment, so this gap here.
United States, Europe, the developed world is going to feel much more normal finally.
Points
within weeks.
They would bag $200 on it, so you don't have to push it. It's the whole thing. You got to learn when to trade, when not to trade.
Which is going to have big impact on their economy. And it's not going to work well, but Xi Jinping can't back away from it.
How much do you think there is a risk of that being extended globally in terms of supply chain issues and just a slowdown in general?
If they're shutting down cities, and that will include significant amounts of production, that means that we're going to continue to have supply chain challenges across the world in 2022. It also means that inflation has the ability to persist.
What's happening on Wall Street?
It's the basic law of economics.
The Fed is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insights.
So we enter as soon as we get the result, basically. Like I say, you can see here the RSI is now coming back to neutral zone, so I might look at taking more buys on, try and catch another 50 pips on gold.
On Bloomberg Television and Radio.
And US30 will push down. The whole idea is to get in as soon as the result is the way to do it. And you can just take the green, you know, you don't have to have any kind of preset on it.
Mercedes-Benz is on a path
There's your spike up on the news release straight away.
Really, we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
It's really a reminder, isn't it, just how sensitive the markets are to any commentary about trade.
US30, as you can see, still in that zone, or ranging around, spike down. See if this comes back down again. Some support zone here. Well, but still looking good. Then obviously on the open, in an hour and 10 minutes time, we'll go where the news, we'll go the reverse.
There's ample liquidity out there. The fear of missing out was a huge driver of trades in 2020.
Like I say, it's always a little bit slower this because you're in that period where, you know, lunch break London and, you know, just pre-trading for the US.
New York City alongside Tom Keene and Lisa Brabbits. I'm Jonathan Ferro. Your equity market down 4
If
in the S&P,
they're
negative 1/10%. A monster
say anything
number
on
from the
Bloomberg.
ADP. Mike McKee, we were looking for 410. What did we get, sir?
Well, as you said, John, outliers get people's attention. 807,000 jobs. That's almost double the forecast for 410,000. The prior month revised down to 505. Remember, we had a surprise in the Labor Department payroll numbers for November, but this is going to cause people to rethink what we're going to get on Friday when the jobs numbers come out.
This is what I mean. You see, that's why you can never predict anything. This now will alter what everyone thinks NFP is going to be.
We're in service-producing industries, including 246,000 in leisure and hospitality. These are the jobs that have been missing so far from the economy. And so if there is some credibility, and of course, when you do ADP, you've got a very long safe harbor statement, you could see a bigger number than Wall Street is anticipating right now. The bet among economists is we see a total change of 424,000 on Friday, 384,000 for private sector jobs, which is what would compare with ADP. So perhaps we have seen a turn and people are starting to get hired.
424, the median estimate, though, as you know, Mike, that range is massive again. At the top end, it's 1 million, with Ian Shepherdson, the estimate at 1 million over at Pantheon Macroeconomics. Here's the move in the bond market, so I'm just a little shifted.
See, that just shows you they don't know what is happening at all. They've got no clue.
By half a basis point, 165. I know this has got your attention in the commodity market, Tom, pushing 81 on Brent, 377 on WTI this morning.
Nobody knows. There's the pushback on gold. Look, let's say pushing up. RSI just broke 56. That's good, and we just hit TP. Thank you very much. 2 more wins there on gold. We've got 28.87 and 31. So we've got 50. We've got £60. That's about $85. So we're $285 up already. Target is 500 across the whole live stream. And
the potential disruption of the variant, given the all-important survey week where that fell, where the disruption really kicked in. Mike, how are you thinking about those issues going into Friday?
Look at that spike. Look at that. Here's your manipulation going with the news. There's your dip down, which, I mean, you can trade that way if you want, but I just stick to the same strategy. I trade against, with the US30 and any US pairs, but with the gold, I will go the way of the news pre-market. And here's why. You see, you hold this. We got a buy, 2 wins there. We didn't do anything here. We knew it was on a support zone, and I saw the RSI coming back. As soon as it went green there, bang. I mean, again, because I'm confident in the direction gold's going to go in. So there is the,
Mike, the asterisk,
that actual bullish candle is actually the news result in a way. The reaction just took 369, 10 minutes later.
It's still going to be the participation rate that most people are going to look to for guidance.
Well, the participation rate is something that the Fed is very concerned about, and if it keeps going up,
it goes, and it'll drop.
To get the kind of numbers that we saw from ADP, that's good news from their perspective because it means that the labor markets are healing. But I wonder, Lisa, if this time we're not seeing Wall Street at least anticipate a different number being more important, and that is average hourly earnings on a year-over-year basis. They think it's going to drop to 4.2%. That's the Bloomberg consensus from 4.8%. That would be a big drop. And it would suggest that the wage pressures we were seeing might have started to ease. Again, we'll caution that 1 month is just one data point and doesn't necessarily make a trend, but that's the kind of thing that the Fed would be looking for in terms of inflation.
It's quite a big result. That was 807.
Mike, I've got to go to the acclaimed Mike. Everybody
next up is the market composite, the PMIs, services and composite. There, unexpected figure positive for the dollar, lower is negative, so we will go the way it's looking to be the same as, which could be seen as good.
Not yet. A lot of analysts have looked at this and don't see relationship developing.
And then the market services,
in part because it hasn't gone on long enough. It took a couple of years of that to really
to be a little bit lower. So again, same thing. We want both will be the same direction. No, they're both to be lower. It could be higher based on this employment change. You just don't know now. But say even Bloomberg, no one gets it right. No one anticipated that big
question
jump
is,
of jobs.
does it become entrenched, and for that, it would inflation would have to probably remain
Big
higher.
jump up.
I wish all our listeners and viewers, Mike McKee, could see your
US30 is actually now pushed up now. Look, there we go.
Bring in all of the current research of our 12 Federal Reserve banks.
Watch RSI. If it dips back down to the zone, we can take some more sells here. I only traded gold on that news result. Just because I know US30, I'm saying, it's one of those things, it doesn't always go with the news, it doesn't always go against the news pre-market. More than likely it goes against it, as you can see here. Here's the spike. But I decided just to go for gold because I'm pretty confident it's an 85% got to be win rate on gold going, you know, the way of the news when it's pre-market. That's just my, you know, I've been trading and the way it works. So I would rather go with gold. What we can do here now with US30 is, if I'm anticipating a drop, so we get a push on the open, we'll just wait for RSI to dip back in and we can catch a couple of sells on here. And we can see the pattern that's being formed as well.
A real shift in the composition of the labor force in January that will be make it a little harder to interpret.
Nice.
Thank you, sir. Looking ahead to
big
M. Leading our coverage just a couple of days away. Tom, on your point,
here's our breakout zone. Here's some resistance. Just see what RSI does. Obviously, if RSI carries on up, we can go for buys. It breaks this zone. Otherwise, if it drops back into the neutral, we can look at taking sales back to our.
Long-term wage agreements. And one company
talking 179.
Prior to the pandemic, it would typically sign 3 to 5 year contracts at a 3% annual wage increase.
Gold, look at that,
now,
beautiful.
Tom, that contract,
as I said,
those negotiations
this is kind of manipulation, anti-manipulation spike. It's really weird because it goes, you know, most people would trade gold opposite to the dollar and to the news events, which is fine. You'd say, oh yeah, you won, but people would be holding trades, and this is what happens. It flashes in, people wouldn't be taking their profits because they'd be thinking gold is going to drop on that result being so good. Obviously it was just a spike, and then it goes opposite against you. So it's kind of a double manipulation, if you know what I mean, whereas we're safer taking a few pips, going with it, and then waiting, as I did. I know this is going to manipulate for a little bit, and everyone's like, oh well, you got it wrong, it's going the way, it's going how it should do, reverse. No, this is just to catch people out, and then boom, here we go. This is the real ADP result. This is all the BS you have to wade through and not trade, and that comes with experience and also using the RSI. You know, I mean, you could have got a cheeky sell here if you wanted to, but it's just not worth the risk when you know you should be looking for the buys. And now obviously gold has pushed up back nicely again. 1820, retesting. Oh, here's the zone, here's the breakout zone, here's previous level. It's held as support distance, and it broke it down for quite a while. Now we're back to it. Will it break? This is a key level. So our breakout zone, that's why you don't have to scroll back, because our indicator tells us this. When you see these green dotted line, the red one is a key support and resistance zones from previous historical data that then tells me that if this zone is broke, there's a good chance we're going to continue on up. And as you can see with gold, it is. This pushing on up nicely. We have a re-enter at 75. So I'm not trading it because I've just done 200, you know, we're $250 up already. We're halfway to our target before we even get to NY Open. We're just going to see if we catch anything. It'd be nice to catch a trade on US30. It's kind of doing a little, that's a little W look, bang, bang, bottomed out here. Like trading is the M, there's a W. Just wait for RSI to dip. See if it comes back down to our neutral support zone. 150 points there. This now, really, that could be our EP of our zone here. Look, so on the RSI, look at that, it's just going to dip a little bit. Then go for a buy on the open. Like I say, as long as it's below this green dotted line, then it's not a true breakout. This is just a range. We're trading within a range based on the news, our levels.
to neutralize this variant.
Here, this bearish divergence that popped up.
Omicron variant still uses ACE2 receptor as its main entry. It means that all of the vaccines which are designed
Sneaky little buy on there.
still works.
Click on the RSI at the same time. I'd have got in on that. Again, would have been just a small.
So I think that is the best news that
still 5 pips.
Studies which came recently, the past couple of days.
Forex RSI gets back into this area.
November's jobs
60 at the moment. We'll just watch this. Quite interesting to watch and see.
The level we anticipated.
If you looked at unemployment, it's a fairly decent report, isn't it?
It's a terrific report.
How will Omicron show up in the final look at 2021 jobs?
COVID
yes.
Is clearly
final jobs.
The number one risk is a pandemic. There's going to be a bit of a roller coaster ride.
Tune in for the December jobs report Friday on Bloomberg.
We'll be live. We'll be live and trading it live, and we're going to try and win $1,000 in about half an hour. That's 30 minutes. That's our goal on that.
Complex has been incredibly fragile for a number of months now, and it just seems to just keep getting hit with new crises.
Just looking at today's trades, we've already done. We've done.
Weekly Boston Symphony Orchestra and Boston Pops performances. See new concerts that go behind the scenes, plus acclaimed
14 trades we've done today.
BSO.org/now, where the music plays on. BSO season sponsor, Bank of America.
4 on gold.
Live from New York City on TV and radio, this is Bloomberg Surveillance alongside Tom Keane and Lisa Abramowitz. I'm Jonathan Ferro. Your equity market down 3 points on the S&P, down about 1/10%. Yields higher by, let's call it 2 to 166.31. Just a monster ADP print coming out 15 minutes ago. 807,000 against a median estimate of 410. Going into payrolls Friday, TK looking for 424,000 this Friday for the payrolls number in America for the month of December.
And John, let's stay on this before we get to Greg Dacko. I think it's really important to point out here that this makes the claims statistic tomorrow at 8:30 ever more important. ADP is way different from claims, but the two combined set you up for Friday.
I think they speak.
He's got it. He knows. I listened to him.
195 sat to 200. It looks like
if the claims and ADP go together, then that will dictate the direction of NFP. And I don't mean I put a trade in or anything like that, but it just gives you an idea where it might be going.
There is a belief we still need to have work to do, but an acknowledgement that this labour market's pretty tight. Demand sky high.
Could be 1 million. Could NFP could be 1 million.
Tom, it's just a lack of supply. That's the issue.
Greg Dacko joins us right now. John Ferro, Lisa Abramowitz, and myself here. We're thrilled you're with us on radio and TV. Gregory Dacko of Oxford, and we're thrilled he could join us as we get to jobs report this morning. Greg Dacko, I want to talk about a single phrase in your wonderful report, a sturdy labor market. Is America ready for a sturdy labor market? What percentage of government America, corporate America, John Ferro America, what percentage have ever seen a sturdy labor market?
Well, I think we are headed towards a more sturdier labor market as we move into 2022. We are seeing signs, including yesterday.
Let's go back to US30. Keep an eye on that on the chart. Like I said, we're looking for a sell here. Cheeky sell. Look at RSI 57.
Quits are strong, and this is not a sign of people quitting just for the sake of quitting, but it's people quitting because they are finding better opportunities, better pay, better benefits, more flexibility in new opportunities. So overall, this is a strong labor market. I think it will continue to
on that little pullback before the open, you see. So
certainly over the first quarter, we may see a bit of a lull.
See if we get anything on this, be it 100 points.
In summer of this year, we're going to see stronger job growth. And again, some of the underlying details in terms of claims, in terms of...
So we want to be out of the trade before the open. And we get that little spike, like I say, in 20 minutes time. And then we're looking at the next news event, like I say, which is the market composite in 1 hour, 7 minutes time. These ones will go with the news.
Power in Germany. What is the labor power of the individual in America?
What did
the key question is really
investing.com suggest us anything?
Back online and how strongly it comes back online. we're certainly going to get a bit of a
Stopped. Fine.
delay in terms of that labor supply coming back.
Just watching US30 and see if we going to hit our TP. Look,
right now, these strains that we're seeing right now are structural in nature. I think that as the labor market continues
going to break neutral, break our average line. Come on down, get some red. Perfect.
To watch over the coming months, not just in the December payrolls report,
Now watching
but over the coming
now.
months as to how strongly the labor force participation rate increases. A
Brilliant.
sign that it continues to increase.
Got it. We get. I got £40, so about $65. Thank you on the sell. So if you miss it, you just wait because you know there's going to be a correction and it's going to come down. Hit the TP. Look, as soon as it hit that line on Trading View, I'm done.
Labor force
So,
participation. There is a bit more bargaining power for workers at this stage of the labor market recovery, but I think that will gradually erode and will, over the course of the year, head back towards a labor market that's more similar to pre-COVID than it is.
we are 300.
To build on Tom's good question,
300 up already.
Response, there is a why underpinning some of these comments, a why people have remained out of the labor force.
There's the sell, there's the red. Look at that. See, perfect.
Health scare, is it worried about what their life is going toward? I mean, the great
See if it pushes down. It's our support level here. Look, move the TP down.
What do you think is the main
in again for sell. Let's see if maybe retest where the news initially hit, forming that W before we take the buys on the open.
It's a combination of factors. If
Move that. Looking at
they're very different than they were 2 years ago.
RSI 44 going red, dropping, and I'd expect it to come down to 33. So we'll just watch this, see if we can grab another cheeky sell on the way down.
Was before childcare more broadly isn't what it was before the COVID crisis. We have an environment in which people
It's bounced just on our. You can see it's just right on our baseline at the moment, neutral support. So we'll just wait. Neutral. You can see on our dashboard, 34% neutral.
Long COVID environment, which is also weighing on people.
See what this does.
So it's a combination of factors, but as I said earlier, I'm optimistic that as the health situation improves over the course of the year, we're going to see people come back into the labor force. The schooling system, the childcare system is going to improve as the health situation improves. The savings are not going to last forever. We already have started to see people draw onto their savings, and so that's going to be another incentive to get back to work. So over the course of the next few months, next year, next couple of years, we're going to see labor supply come back. Again, I don't think that we're in an environment where labor supply is structurally constrained. I think it is constrained for and will be constrained for a persistent period of time, but that will gradually alleviate as we move through the rest of the year.
And so this really goes to the idea, and you were saying you don't believe in a wage spiral, neither does Janet Yellen, Treasury Secretary.
Come down a bit more.
You're also facing increasing inflation
44.
when it comes to rent prices, when it comes to supply chain disruptions. The signs point to going on for a longer period of time due to the Omicron variant and some of the zero COVID policies. So how do you dovetail the idea that wages need to keep up with consumer price inflation, but not perhaps get ahead of it and create a spiral? How close are we to the threshold of, I don't want to say stagflation, but something that looks a little bit more like a crimp on growth when it comes with higher consumer prices?
Yeah, I certainly don't think we're in a stagflationary type of environment, which would be synonym of no growth or low growth and high inflation. What we are seeing are messy inflation dynamics. I've used the term in the past where it's moderating expansion with sticky supply-driven inflation. We're going to be in an environment in 2022 where demand is going to be moderating. There's going to be
Bouncing back a little bit.
The Fed is going to tighten.
Like I say, it's got to break.
It's going to have a negative effect on
Break our baseline. You see, it's on the support levels on the baseline here. You can just zoom in and see
inflation come back down.
our baseline holds up pretty well, ranging around a little bit.
I don't see the U.S. economy settling into a higher inflation.
See if it just pushes down.
We continue to see
Wanted to grab a little bit. You don't have to. Just if it came down to here, look, there's 5 pips. You know, we do $20, $30. We broke that zone. We can get 100. So potential here. Back into the zone.
Below 3%. We don't expect core PC inflation to come under 3% before the fourth quarter of this year, but we're not moving towards an environment where there is that settling of wage and inflation pushing themselves up on a continuous basis. Instead, what we're seeing is essentially
round, just got to hold
inflation through the rest of the year, and wage growth will continue to accelerate into the early part of this year, but I would expect it to gradually cool thereafter.
gold. Look at that. That's not proof.
But Greg, critically, with that
ADP,
scenario,
perfect.
are you optimistic
Gold.
that corporations can adapt and adjust to a new inflation regime?
I think
great move on
I know
gold.
you were talking earlier about some companies that are thinking about increasing wages at a higher pace. But if you look at the most recent Conference Board survey, they noted that businesses were planning higher wage increases for this year, the
Could have
highest
got
since
in
2008. But this is nowhere
so
near the
many
types of wage increases that we were seeing in the 1970s,
opportunities.
1980s.
So we took the buy initially on here. We didn't do the sell. We'd have got back in on there, which we did. And as we see the bright green, we're back in on there. Look, perfect. Again, that should be another pips away.
Brilliant question come through from a Bloomberg subscriber. The best questions come from the audience, Lisa, as always. Can you distinguish between a broken market and a tight labour market? Let me ask that question, Lisa. Have a think about it.
Gold now pushing 1827, hitting heavy resistance here. You know, is where I've been looking to take
Well, I
sells.
think you have to define what broken means. I think a lot of people.
Obviously, I'm looking to take sales on the open anyway in 45 minutes, so we're in no rush. Just drinking coffee, watching. See. I'm more interested to see if US30 can break our zone here in the neutral zone that's kind of hovering around. Back up to 47. Interesting to see.
It's just a churn that is incredibly difficult to understand, John.
Payroll's
So
just
that's
around the
more
corner,
like
400,000, just north of that, the median estimate after an 800k plus print on the ADP. Big conversation coming up at the top of the hour. If you're not listening to the wonderful Paul Sweeney on Bloomberg Radio, on Bloomberg TV.
424. I think it's going to be a million. That's my personal. After they get it wrong every single month for the past year or so, just about, it's been way out. I can see it being close to a million, but that doesn't mean I'm entering a trade. I'm just preparing myself to be quicker on the buy for gold, sell for gold.
Given what we saw from Hong Kong and China to start 2022.
I am so glad you brought this up, John. I happen to agree with Mr. Pulaski, so I'm talking my book, but I just think it is way underestimated how corporations and nations will adapt to this pandemic. They're going to make tweaks here and there, as we just heard from Gregory Dacko. One of the real issues, John, as we go into the afternoon is Paris, is for Lisa in the 9th arrondissement, for her to go over to my favorite seafood place, Le Collier du Bistrot. I mean, it's a no-brainer, John. You can literally walk there from where she is off Houseman.
Is that the sun coming up in Paris, Manhattan, Tom? It's just coming up now.
Foggy today.
So is it? Okay. Lisa, get some rest. It's good to see you smiling. Elisa Bramis and Tom Keane slowly getting back into it in 22.
Again, ranging around, sat on that support, right on the daily neutral.
We're negative 1/10% from New York.
So it might not happen, you know, just yet. You could just range on this, and then we've got a trend line here. Look, we forget this trend line break, and then we get buys to here, and this is what we want for the open, ideally. I don't mind it ranging around a little bit. We might be able to get a cheeky little scalp between this zone here if it happens. Just watching it now. If not, we'll just wait to take the buy. Like I said, the lower this goes before the open, the better. Especially if it can retest the zone where we had our win on the sell. Yeah, you know, so.
Jobs in November, highlighting persistent churn in the labour market. That increase was broad across industries and pushed the quits rate up to 3%, matching the most in data going back to 2000. The unprecedented level of resignation suggests a lingering struggle for employers.
Well, you got to think again, your stop loss is going to be above here.
Military present at its border,
this is taking a short position, so now on this, you're targeting 120, fine, we're targeting 100. Then in terms of a stop loss, mine's going to be, I mean, it could be tight there. For me, it'd be there above that breakout zone. That's what you're looking at.
And Ford shares surged to a 20-year high after it doubled factory capacity for its battery-powered F-150 Lightning pickup. It's a sign of the
But because I'm watching it, I'd be out, you know, if price breaks that trend line, so it would be here.
Plug-in truck this week after already receiving about
And we're dropping, you see, 42. This is what I'm saying. Look, see if it hits TP.
Powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Hey, we're in and out there. Got a cheeky little win. Fantastic. There we go. Just get set on support. Let's see. What did I get? $20. There you go. It all adds up. It doesn't matter. Win's a win. That was a cheeky little bonus trade. Yeah, I could have held it, but it's come down to our level. Look, we're on, you know, you're trading in heavy support, so you don't want to take a risk. This could drop down, this could break this. If it does, we'll go again. We'll go again. That's the whole thing about it. But I've just taken $20 while talking to you guys in 30 seconds. So, and the whole idea of this stream is to try and bag $500 by the time we've ended the stream. So, I'm going to add up where we're at now.
When you think about schools in particular and children, where we've seen pediatric hospitalizations actually on the rise amid the spread of this variant, do you think keeping schools open is the right move?
If done well, school is a relatively safe environment for kids. Masking, tests, especially during the surge of cases, I think it is very important for kids to be in school, and I think the chance that school becomes an explosive source of new infections is low with precautions.
10 million cases in just a week.
So we've done 1, 2, 3, 4, 5, 6, 7, 8 trades since the ADP news.
Slow down, and that's probably within a couple of weeks or a few weeks away.
Which is bagged as 246 UK pounds, which if I convert that to dollars is 332. There you go. So we're 332 up already. There you go, there's the hit the TP. Oof.
Every Friday with 30 minutes dedicated to fixed income, I'm Jonathan Ferro. This is Bloomberg Real Yield.
Perfect. The RSI, you see, messing around, you know it's going to range a little bit now. And like I say, I'm waiting particularly for this 2 o'clock my time, UK to 9 a.m. US time. That's going to be interesting to see.
Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You can see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down, the manure and the straw breaks down into a...
Last week you get emails saying your profit has been reached. Thank you. That's what we all want.
And for growing a whole range of different vegetables, holds the nutrients in, holds the water in, and it really increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
Right now, about half of U.S. households invest. We'd like to get that number up to 95+%. Investing should be as ubiquitous as shopping online. It should just be something that people do.
Kind of 8 minutes, like I say, until we get that. This is why I get out the trade. Look, you see now it's reversed and gone up. That's fine. This is what proper true scalping's about. Just getting in and out, using the zones that Axe System gives you, I told you we could trade this gap. We did it at $20. It's fine.
Megan Green of Harvard, we're thrilled that she was with us yesterday with her perspective.
Now, what we could be doing is waiting. If we cross here, it goes green, we're looking to take a buy, but we want to take the bigger buys. We've got this, like I say, always this, 9 a.m., 30 minutes before New York opens. There's always a cheeky move. Always quite interesting to watch.
Interesting Eurasia Group top 10 risks with what we see immediate. And Ian Bremmer's known for years as he's done the top 10 risks, that it gets rewritten by the moment. We're going to read
51 minutes to the PMI news as well.
The expert on Russia.
So we can go and make a coffee in a minute. I just want to see this, see what happens. It's amazing if you watch it every day, and if you haven't got time to do it, but there's always a little move half an hour, 30 minutes before NY open. So I'm just going to watch that. I might even trade it. Let's see, it could be a new little strategy that I've found. There's always a move.
One thing that Putin does not want to see is chaos.
People trading, getting to their desk for 9 a.m.
So they'll be looking to see what the Kazakh government's responses look like.
Always interesting.
And whether or not they can control the situation. And I think also they'll take some lessons in terms of what this means with popular uprisings.
See, look, it's bounced. This was just a spike down below our baseline, but our baseline is neutral support, which is kind of the daily pivot on a 3-minute time frame. Remember, this is a key zone. That's why I was never going to hold this. I was just going to get green and get out, because this is a key zone, and obviously it's proving the point now. And you can see it's forming a W pattern. We want this to, be up here, the open. And ideally, we want to be trading this zone here. This is where we want to be scalping, getting back up to here. So we can kind of move our TP now, kind of see if we can get to our breakout zone. There you go, just below it. That's what I'm going to be setting for NY open. Put that in there. I'd like to see. You see now we're going grey already. We're on this. This could range a little bit now. We're in no rush to take a trade. I just want to see what happens in the next 5 minutes.
Well, Moscow continues to believe that it has a very important role to play in this region, that it's its sphere of influence.
Watch this. 5 minutes to go.
Some of the tensions between Russia and the West that we've been seeing just over the last couple of years.
So Russia's always a problem spot, typically, when you look at some of these geopolitical maps of potential risks. And here we have it at number 5. It moved up significantly. I believe that you said it wasn't even on the list last year. So what changed to make it in a situation, and certainly the relationship between the U.S. and Russia, at the brink's edge of precipitating some sort of international crisis now versus, say, 12 months ago when it was just Russia?
Well, I think in 2022, we're looking at, a few issues that could actually lead to crisis. Certainly there's, the U.S.-Russia relationship has been particularly bad over the last several years, but it's these specific problems. And of course, right now, the big focus is on the situation with Ukraine, with Putin's demands about basically a redrawing of the Eastern European security order.
Just wick down, you see, as I said. It's that neutral zone. You want to wait for it to go green. That's what we do.
But beyond that, if we look ahead later to the year, there's concerns about whether or not Russian actors, whether they're state or non-state actors, will interfere in the U.S. midterm elections. That has been a big red line for President Biden. He's made that pretty clear. And so the trigger for some sort of U.S. response to that is fairly low. Other issues of concern would be in the cyber realm, a repeat of the Colonial Pipeline ransomware attack last year, or the SolarWinds case. If we saw something of that nature, that would also be a concern. So these problems have been mounting, and this year there's a real risk that one of them turns into a crisis.
Going back to where we began the conversation with Kazakhstan and the idea of higher gas prices igniting social unrest, how much has the Nord Stream 2 issue really caused a fissure between Europe and the United States, with Europe in a much more delicate position with such a strong geopolitical location with respect to gas prices and Russia?
Well, certainly the European reactions, I think, have driven U.S. responses to a certain degree. And with the Nord Stream 2 pipeline, the Biden administration basically struck a deal with the Germans to allow that pipeline to go ahead with some very heavy conditions. You know, the instinct from Washington has been to impose sanctions to try and stop the pipeline. The Biden administration has resisted that, I think, because they're, you know, in the interest of trying to repair the transatlantic relationship, especially with the German government, they want to be very careful about how the U.S. responds. Also, I think it's a recognition that ultimately the German government and their regulatory authority over the pipeline is probably the single biggest obstacle to Nord Stream 2 becoming operational. But for Russia, this is a big deal. Putin certainly wants this pipeline to become operational. He wants to make sure that Gazprom is able to keep its market share in Europe. And that leads to tensions between Russia and the EU as well, where there still is a lot of skepticism from many members, including especially Poland, about this pipeline and whether it should be operational at all.
Alex, thank you so much. I've got 8 more questions, but we don't have the time today. Alex Bordeaux, Eurasia Group, on the top 10 risks for 2022 with a particular focus on Russia daily in the news. Lisa, I want to focus back to the bond market. Where in your mind, based on your reading, is the...
Well, look, let's see if we get any kind of movement. Here we go. Like 30 seconds to go. I'm just going to see
or is it before that?
on this next candle. 30 minutes before the open.
That even if there are some negative news points that come out and there still can be a sustained sell-off, that's significant. I still keep going back, though, to the technical aspect of the sell-off. The fact that corporations have been selling debt at an incredible clip so far this year. You've seen Italy selling 30-year bonds today. Everyone's trying to get in while the going is good. And how much is this affecting a market that still has not gotten fully up and running, with a lot of people still on the beach, I want to say, but probably at home with a cough?
Well, I agree with that. And there's sort of a tradition here, folks, that the year starts maybe the Wednesday after New Year's. And I would suggest, Lisa, 5 years ago, 8 years ago, that changed in the vicinity of January.
Now it's dipped down. Here we go. Look, here's the move. RSI's dipped down to 50. We nip in for a sell. We just, I think it's just too close to that support zone, isn't it? It is too close. Well, I see this candle. RSI is 50 in the neutral. Now it's pushing up. Look.
I am not in Paris.
Goodbye. Look.
Broadcasting remotely because of Omicron.
53.
But I am not in Paris. I am in New York City. Just to set the record straight.
Yeah, it's going up.
Thinks I'm on a long vacation and had them ship me equipment on a beautiful vista in Paris.
Mon Dieu, I mean, folks, for those of you on radio,
yeah, 54. Look at that. There you go. See, there's always a move. Always a move.
And she could be sitting there in the cafe this
around this time.
Got the Paris look down, cold.
RSI's 55 in green.
She's so tough. She can even do that. We are going to continue here on an important day as we roll into the job economy on $80 Brent crude. Edward Morse in the time.
Brilliant. There you go. I'm in and done. Hey. Got a cheeky little buy. I've never usually traded that. There we go. I got £29, about $35 there. There you go. Just shows you when you learn, watch the market and how it moves and manipulates. You know, no stop loss, no nothing, just cheeky scalping. Get in, get out. Look at that. There's your spike. 30 minutes before the NY Open. Love it. Love it. And just went with the price action. Saw the RSI go green, nipped in. Another 35 on the buy. Brilliant. Yeah, glad you grabbed some. So yeah, it's just weird. Yeah, I've just been noticing it. So you know, it can go any way, but obviously you know, once I saw that break and that RSI, see, without the RSI you'd be guessing. With the RSI going green, you've got an indication you're going to go and get, you know, and you could hold for 50 pips, hold for 100 pips. I mean, look at that, it went all the way up to 155. But you know, I just want to be in and out, get some green. $35. Now it's took us to $380 now for the session. So all good. Now I want this to back off. Obviously it's hit the trend line, it's hit some resistance, it's backing down, because we want to go again in 28 minutes time and take the buy, and we'll be trying to get here. Here's our trend line now, just dropped in, beautiful, live. I'd love to see that forming. So now we've got a definite zone. When we get these crosses on our trend lines, we've got a really good zone. Here you go, here's the push up look. And obviously if it does already hit our zone before open, then we reset and we go to our next level. Here's the previous high, 36870. So we'll look for that zone if this is broken beforehand, but look to take a buy again if this candle breaks above here. Yeah, we're just trading the open early 150 chance here. Yeah, it's good to watch that little move. You know, I just noticed it every single time there's some kind of move, and I thought, well, why don't we just trade it? I'm watching it, let's get in on it. Just got to watch price action, simple, through scalping. RSI's backed off, look, because obviously it's hitting that resistance. There you go, dropping off. You can put a line across the RSI look as well and see where the levels are. Look at that, look, see? Look, tested, down, RSI, tested, down, look. Almost like a 59.9 is the key level. Again, the RSI breaks above that, got momentum to the upside, that should push this through. Doesn't, it'll come back down to the neutral zone. Little tips, look out for.
A big rotation we need to talk about from New York City for our audience worldwide. Good morning, good morning. Here is the morning price action. We're down 2. There's not much of it. The countdown to the open starts right now.
Good morning, Jonathan. Well, good afternoon.
To get set for the start of U.S. trading. This is Bloomberg, the Open, with Jonathan Farrow.
From New York, we begin with the big issue. The approach to COVID continues to splinter.
What we have in China,
the zero COVID tolerance policy.
Every little case, immediate lockdown, clampdown.
It's a deep-seated problem.
The divergence in terms of absolute growth.
That could pose problems for China.
Look what Omicron is doing already in the United States.
We've already seen them step back, right, from 10 days quarantines to 5.
The U.S. is walking the line.
It all comes down to Omicron.
The economic activity in China is more affected by lockdowns than in other countries.
2022 really being another year of sealed borders in China.
It's a restraint on both supply and demand.
That will be significant.
Joining us to discuss is PIMCO's Erin Brown, Morgan Stanley's Sri Sankaran and TPW's Jay Poloski. We wake up this morning with more restrictions in Hong Kong, banned flights from the US, the UK, 6 other nations as well. The United States trying to work out what 2022 looks like, Erin. China and Hong Kong living in 2020. You've talked about the importance of the differentiation between geographies across sectors. How important is this story as that's concerned?
I think this story really does underscore that the different approaches that different countries are taking this year, as well as last year with respect to the virus, is going to differentiate both economic growth as well as the market outcome. And so I do think that that's something that we really have to pay close attention to. You do see in the US, while there certainly has been a slowdown, particularly in some of the travel-related sectors, by and large, while we do expect growth is going to be slower in the first quarter because of some of the restrictions being undertaken.
Watching all the futures, and like I say, we've got the news in 38 minutes, got a couple of quick news events, and we've got 45 minutes to the oil, then we'll be done. So let's see if we can get to our target. Like I say, we're banging on the door of $400.
I do think that you're going to continue to see the US be an outperformer throughout the at least.
I'm thinking for the open.
So can you speak to that as well? The zero COVID effort in Hong Kong, the zero COVID effort in China, and the effort just to get back to work in America. Does that set you up for two different?
See how it's ranging, hit the trend line. It ranges between this zone, our triangle here. So you'd really, unless you really want a micro scale, you just want to leave it alone and wait for the next break above or below. We've got sat on a lot of support here. So obviously we'd prefer it to go the way we want it to and go to the upside and break on the open. So leave that here. Our potential. Now let's have a look at gold. Gold is up against the heavy resistance now. Our blue zone's kicked in. Right on a heavy resistance indicator on our grid. So this is where obviously I want this to sit here, because what we're going to do on the open, we're going to take a cheeky sell. We want this to be,
I come to you a little bit nervously because I understand the fire alarms
go off
as well with the flashing behind
you.
you. So work with me,
I mean, the bigger TP line could be back to our baseline here. Look how flat it is. Obviously, you know, that for me would be enough. Set that as a potential.
I mean, look, the fireworks back here for you, buddy.
See, you know, you were taking a short from here. Obviously, this is where I would have my stop loss. That's where I'd run my target to. Like that. If price action doesn't just, because you get these spikes, so you don't get spiked out. You want to make sure you just clear with that. So if price does actually finish, I mean, I'd be out before, but say you were just nipping out and you were having to leave the trade running or whatever, this would be your setup from the open, and then you could take a take profit here. Look, I probably will do, and then leave it running. So because from here, look, to there is 100 points. That's all I want, 100 points. Not being greedy, but you could leave that running if you wanted to, with a chance of it coming down to your second level there. So kind of, I would set that up. I don't need to use this indicator because I've got our grid system. This is the good thing. Our points of interest is giving me all the stop loss, take profit levels that I need. It's telling me, along with price action, where I need to be placing my trades, where I need to be getting in and out, and that's the whole thing about this our axe trading system. You don't need to use any of those tools that a lot of the traders have to use. Take some of the guesswork out of it. So you could take a trade now, but you know, it's a risk. RSI's just dipped. It could go back up again, as we've seen, and range along here for a while until the open. This is more of a safer bet now. Just really wait. We've only got 20 minutes. You know, wait for the momentum, because you'll get a spike up and then it should shoot down.
Stateside. Want to get back to the Hong Kong story too. This quote from Carrie Lam. My view is that given the very dire situation, we have to grasp this very critical moment. We have to contain the pandemic to ensure there will not be a major outbreak in the community again. I want to bring in Bloomberg's Sam Fazeli.
Won't be going over to Hong Kong anytime soon, even though I was planning to.
Like 2022.
Jonathan, you're absolutely right. It is time now. It's almost 2 years in. With all the things that we've done, vaccinations, boosters, drugs that we have, antibodies, okay, some of them are not in great supply yet. When are some of these countries going to learn that you cannot continue with a zero COVID forever? At some point, you just have to bite the bullet and go for it. Mostly, Jonathan, because it's not just humans that get infected by this virus. Animals get infected too. So you control the human population. What are you doing about your rats and mice and cats and dogs and deer, etc.?
You're going to be very busy, Sam, if you start chasing animals as well. Sam, the line from Hong Kong, though, as you know, 22% of the over 80 population is vaccinated. 22%, Sam. It's north of 90 in many developed nations. And Sam, you say bite the bullet. I wonder what biting the bullet in a place like Hong Kong would look like with numbers that low.
Vaccinate. That is how we are seeing a much lower problem, relatively speaking, with Omicron in terms of severity of disease versus Delta, as well as the virus having some characteristics that make it apparently less severe. So, but vaccination has been the way to do this. Or if you've been unlucky, prior infection, perhaps not as good, maybe better, who knows. But if you haven't got either, then you're in a difficult spot. And that's what this country is dealing with. And the other problem, Jonathan, is also the vaccines that you're using. How effective are they? We have a lot more information about the mRNA vaccines, etc., than we know. I'm sure they have information about the vaccines that have been used in China. What happens there?
Sam Fazeli, always good to hear from you, sir, of Bloomberg Intelligence. Sam on the story right now. If you want to repeat that stat, I will. 22% of the over 80 population in Hong Kong vaccinated, just 22%. Here's a line from Barclays. The optimistic view on things, the constructive view on the outlook. As the world learns to live with the virus, vaccines, new treatments and fewer restrictions should make it less disruptive for economies. They go on to say, we see encouraging early signs of supply woes easing, which could be a key theme in 22, helping margins and slowing inflation. Erin Brown, I want to come straight to you on that. A key theme in 22, margins are better, inflation slows, supply chains ease. Do you see the same thing evolving?
Well, I think one thing to keep in mind is that companies last year did really well in terms of navigating a very tough environment with respect to margins and actually maintained margins at a much better level than I think many would have anticipated going into the year. So despite, the challenges, they were able to reduce costs effectively, maintain margins. And I do think that this upcoming year in 2022 will be a better one than we saw last year for margins. That said, I do think that the supply challenges are going to persist. When you look at the number of ports that are outside my window right now, or the number of ships outside my window right now, trying to get into the LA and Long Beach ports, they remain close to an all-time high. Similarly, we're seeing the highest level ever for idle ships outside of Europe. You're starting to see on the margin some parts of the
Futures mixed on height concerns. Always something, you see. So
and not get worse, but we're still, I think, a ways away from.
we're interested to see how this is going to move the market as well.
That's probably not going to come into the back half of 2022.
I'm here, we're waiting.
Virus disruption is going to exacerbate some of the challenges that we've seen in the supply chain between the US.
The US30, exactly as I said, looks trapped in our triangle, our Bermuda Triangle. Called it. And you just don't want to be trading anything, just waiting. This. Hope it's going to break a zone, and at the same time, gold I wanted to hold where it is now and get a nice sell. Need to write this out as the NY Open.
Jay, can I come back to you on that, because I think this is a key part of your view that things get better. The supply chain story improves. China's still shutting cities down.
And like I say, each to their own. Where you want to hold, where you want to use your risk management and your stop loss. I just show you how I do it, and I'm always looking for that 100 kind of points. That's enough for me. Through scalping.
Right now, John, just look at the PMIs that just came out for December, not just in the US, but in Europe and in Asia. Better than expected, both manufacturing and service. And look, I think the way I read the PMIs is that there is clear evidence that the supply chain woes are easing right now.
Yeah, that's why I think this will be, as you can see, look, they're predicted to be lower, 56.9 and 57 over these. I think they'll be better than expected. So that would be great.
I think the December PMIs suggest that Omicron is.
This could be better than expected.
And by the way, look,
and then we'll get more buys on US30 and sells on gold.
They're going to peak in New York this week or next week. We're going to see.
Boosting up a little bit now. Wonder if it will stay trapped in this zone. Hope it does, because we've only got 15 minutes to go. We'll enter some trades.
The world, John, is that we're in a much higher nominal growth world than we were pre-COVID, and nominal growth for Q4 in the U.S. We're coming up on earnings. Nominal growth in Q4 in the U.S. is probably double digit. So I think earnings are going to be much better than expected. And a high nominal growth environment with negative real yields is very supportive for earnings growth. And earnings growth is better than the market performance. And so we're having multiple compression, a little bit in the US and significant multiple compression in Europe, for example, where earnings in 2021 were up 50% and the market was up 20%. In Japan, earnings were up 30%. The market was single digit. So we're having significant earnings outperformance. Hard to see stocks going down big in that environment.
Sri, I wanted to make sure you got the final word, sir. Sri Sankaran, do you share that constructive view of Jay Pawlowski?
Probably be more in Ellen's camp than Jay's. I mean, we were thinking about this.
Bang on, it's bang on. I totally agree with what he's saying.
Progress through the year, both in terms of the inflation story, the supply chain related narrative, etc. But it is going to be a fairly slow normalization that we are baking in. I mean, our economists, Ellen and team, basically expect inflation to peak in February, March, but it is likely to stay above 2.5% for the most part of this year. So that's according to our forecast. So that just means that, yes, you're coming off the peak, but there's still a fair amount of normalization that's still left in the system as we progress through the year.
Sri Sankaran sticking with us alongside Aaron Brown and Jay Pawlowski. I want to get you some single names going into the opening bell. The opening bell 18 minutes away. Here's Abby.
John, let's keep it macro. Jay was just talking about how we had one of the most violent factor rotations yesterday into value and cyclicals out of growth. Let's take a look at that trade on.
RSI has gone back green again, but you can see just did it here. Look, no, this was the, you know, spike up, and it's just repeating the same pattern. So you just avoid it.
A solid gain, and
All this is to help us. It breaks. We can look at it.
But just in a more subtle way.
Big conversation.
So we're so close to the open.
Very shortly. Abby, thank you. Coming up on this
10 minutes till we enter a trade, or I will be entering a trade.
On SharePower's next move.
As we move through the course of the year, we start to see inflation decelerate
Gold,
a little
exactly where we need it to be. And again, I can just move this now up. The further it goes up, it need to hold. The good thing about the grid, just take it to the next level, just above, remember. That is 100 points, then I'm a happy man. Look at that, yeah, it's well within. So that's what I'm looking at on gold as well. RSI 73, so it could be a cheeky buy sell, who knows. I'm looking for a sell. Here we've got the zone, the resistance zone is still holding, look, still below. Gold 1825, 1827, you know, it's pretty good, pretty good. It's broken, that's a key $1,800 we've been looking at for the last few months. Look at the divergence, was spot on as well. 5 candles, that 1, 2, 5. And in just the divergence.
From the worker perspective, a recent headline, you got Kellogg's Cereal Union says the latest agreement that they had was rejected.
And even if you'd put a buy in from here, you'd have held because your stop loss would be here. You'd have hit target before this spiked you out. It would have been your TP, of course.
These are always important discussions, and usually
you like trading divergence, you know, all there built in.
Wages. The industry is making a lot of money. The longshore folks would like to see that. Now, I don't speak for either side, but training and development of the workforce will also be key as robotics and automation.
So, 10 minutes to go.
The workers cannot be left.
And then once the open's done, we'll get ready to trade the news. Quick coffee.
Workers had a lot less negotiating power. Do you feel like the pendulum's shifting?
The International Longshore and Warehouse Union, which does work across 29 West Coast ports, is very strong and a democratic organization.
I think that it's hard to put your head around any narrative. Let's just be honest. We've had sort of a shift in, are we in some sort of stagflation fears moment? People were talking about that all day yesterday.
From New York City.
We're in London, in Sydney, in San Francisco.
9 a.m. in Beijing and Shanghai.
Good morning, everyone. Have a great evening. To recap the headlines.
You do not want to miss this story.
How are you thinking about those dynamics?
Once the COVID shock passes and things start to go back to normal and workers fully return and demand goes back to normal, I don't see any reason why the economy wouldn't revert back to the low inflation regime that we've been in for 20 years.
That was Neil Kashkari there of the Minneapolis Fed. I have to say, a really interesting blog piece, an essay from him in the last 24 hours. I know it's fashionable to throw mud at Neil Kashkari, but I wish, Michael McKee, that people wrote as simply as he did. All of the people on the FOMC in that essay yesterday. This quote right here, Mike, got my attention. The costs of ending up in the high inflation regime are likely larger than the costs of ending up back in the low inflation regime. That man looking for 2 hikes.
Yeah, and he's talking about the idea that we are going to see workers getting back to work, and we certainly saw that in the ADP numbers this morning. Came out huge, 807,000, the highest since May, and that is almost double what was expected. 669,000 of them were in service industry jobs, 246,000 in leisure and hospitality. So maybe we are seeing something there. However, this is the data point I was going to show you before even ADP came out. Look at this. This is mortgage applications and auto sales. We got those in the last 24 hours. Auto sales come in disappointingly, 12.4 million, the forecast 13.1. Mortgage apps down 5.6%. That's the lowest since January 2020 before the pandemic began. Now, no, single data point isn't an issue, but you saw the trend there. It is going down. The numbers do fit the Fed's scenario for inflation. So what do? Well, you can't expect them to raise rates because even as Neil Kashkari says, we need to do something about inflation at the moment. But this afternoon we'll get the Fed minutes. Don't expect it to tell us anything new about the rate structure other than maybe how firm convictions are for more than one rate move. No decision made, but how did the discussion go about the idea of reducing the balance sheet? That chart there that I was just showing you shows that in 2017, when they began reducing the balance sheet, it did not disrupt markets. The S&P continued to rise. And this chart shows you here that they waited until after, almost 2 years, until after tapering before they started reducing the balance sheet, and the rates started to go up. So do they follow that scenario? The betting is they'll move faster and sooner this time.
Mike McKee, the Fed minutes coming out a little bit later. Mike McKee there on the Federal Reserve. We've talked about this a lot on this program. There is a difference between the removal of accommodation and the tightening of policy. Take a listen.
Everyone remembers that quote that was made, removing the punch bowl when the party gets started. But included in that quote was the notion that you're not expected to like this. If this is not problematic in any way, then the Fed is probably not tightening policy. How do you adjust monetary policy without a tightening of financial conditions? And I don't think that that's possible. I think the Fed has to tighten financial
5 minutes to go. Look at that push down you see on US30. That's what I want. Just breaking our trend look. Going to sit on that support, ranging around. Perfect.
Sri Sankaran, Jay Pawlowski. Aaron, first to you. The difference between a removal of accommodation and policy tightening.
Yeah, I mean, I think of them, fairly similar. The Fed has a couple of tools at its disposal in order to tighten policy. One is raising rates. The other is, shrinking the balance sheet. And those are the sort of primary two tools that the Fed has at its disposal. I do think that the Fed is likely to move faster in terms of quantitative tightening this time around than what we saw back in the 2017 episode. And the reason for it was really laid out by Chair Powell last month, in which he stated that the economy starting out right now is much stronger than what we saw in the previous tightening episode. And so I think that will force the Fed to tighten a little bit faster. Now, that is going to come at the expense of rate hikes. So we'll likely see, if the Fed were to move faster, we'd likely see a slower pace of rate hikes. And the balance of which I think can have, particularly disruptive effects to certain parts of the market, particularly mortgages, is something to be, mindful of and watch. But overall, for equities, I think that the market's going to see them, slowly removing accommodation, but I don't expect it to be, significantly disruptive to continued equity price appreciation.
4 minutes to go. It's logging. Make sure we're all sorted. Gold, US30 set. And gold, look at that. See, perfect. Just where we need it to be. Sat in our heavy resistance. So we just want a nice little pullback to get some green trading the way of the ADP. So gold down, US30 up is what we are looking for. Let's see if it happens. Obviously, if we get the reverse, we'll end the trades and go back in again. But let's hope we get it.
Some indication that this time is going to be a more hawkish Fed that we are kind of seeing, and the time lag between the start of a rate hike and the beginning of balance sheet reduction, that's not going to be definitely as high as 2 years as we saw the last time around.
Jay Pawlowski, your view.
Well, I'm not a bond expert like our two other guests are, but I'd say, look, I think we're at peak Fed hawkishness. I think the Fed and the market are kind of on the same side. We're going to end tapering. I think inflation is going to be materially lower in the spring and summer of this year. It's almost a mechanical base effect, and that's where most investment banks are. A sharp slowdown. Inflation peaks in the U.S. in December, January. So we're in the peak inflation period right now. By the spring, inflation will be about 3 to 3.5%. And then we move on from end of taper to start of rate hikes, balance sheet shrinkage. And I would just remind everyone that, look, it's not just the Fed. We have the PBOC, we have the ECB. The PBOC is likely to be easing and providing liquidity to the world. ECB is not likely to do much. Bank of Japan not likely to do much. So I don't think this is, I think the Fed is not a huge issue in terms of my market thinking. We know what they're going to do, probably 1 or 2 rate hikes. And I really think the opportunity is in, John, is thinking about not a return to pre-COVID economic conditions, but a better outlook, a higher growth, low inflation, CapEx driven productivity surge like the second half of the 1990s. That's the analog that I'm looking at. And I think when we come out of COVID into a year of clarity and a year of normality, which I expect 22 and 23 to be, we're going to see a much different global economy, because in the interim period, technology has been accelerating what I call the age of speed. And I think that's good for margins, that's good for growth, and that's good for risk assets. And that's what's not priced in anywhere, John. Nowhere.
Jay, that is a beautiful story to help equity bulls sleep well at night. That's for sure. We're going to return to some of those points. Fed hawkish.
That dropped down. Right.
A single rate hike.
We're going to go the opposite way. Look, it's going to sit on that support. So we get ready. Perfect. Right, good luck, everybody. Let's see what we get.
That conversation still ahead from New York. This is Bloomberg.
So we're trying to get to that magical 500, about 370, so we need another $120 basically to hit our target, what we set out on the live stream. So go, move my arrow now, manipulation, on our support, move this down there, there's our key level, if it'll get back to this, broken our trend. So we're in trades, 1 minute to go.
When you think space, you
good luck, everybody.
One space agency that travels under the radar.
Hold ranging. We're in profit on everything at the moment, so we're just waiting to see.
Which is surprising.
Let it fly.
What the European Space Agency has achieved and how
about 30 seconds to go. Open.
We've collaborated with pretty much everybody who is involved in space exploration.
The ESA wants to be a leading force in furthering humanity's mission.
Sending my trades on US30, perfect.
If we want to have a successful human
waiting on gold.
We are going to have to learn to live and work off-world in a different way.
Perfect.
Where we are going to learn to do that is
we're done in 30 seconds. There you go, after the open. And we've got 4 trades there. I took 2 buys on US30 and 2 sells on gold. And what did we get? Oh my lord, what did we get? What did we get? Just add these up. We got 24 and 42 for gold, 60, 42. We got 168. $222. So we've done it. We've done it, team. We've done it. We've done it. We've done $500, over $500 in all that trading. All done. And EP smashed.
Sandler upgrading Pinterest to overweight, seeing an attractive risk reward following recent declines, and finally Wedbush downgrading Wayfair to neutral.
And there's the dip on gold, starting to dip down now. Look as well.
Coming up, the new year kicking off.
Perfect.
In favour and growth stocks under pressure. That conversation up next from New York. This is Bloomberg.
Just put my results there. Look at that. Perfect for the open. 4 trades. Another $220. And we've done it. over 10% on the live stream. Done it. There you go. This is how you scalp. This is how you make the money. This is how you can do it.
Soaring energy prices and a short supply of key chemicals that produce synthetic fertilizers are sending pig, cow and horse manure prices soaring. Even human waste is in demand as farmers hunt for alternatives. Fertilizer helps increase crop yields.
You see how much moisture is held into this. It's a lot of organic material into the compost, so it breaks down. The manure and the straw breaks down into a friable mix that can be mixed into your soil in the ground and for growing a whole range of different vegetables.
We are there.
Holds the water in,
it's perfect.
Increases the kind of biodynamic profile of the soil.
The recent price spike could mean more farmers going organic for the long term.
There you go. So that's 10% return on the account, and we've been trading 90 minutes. We started the stream at 1 PM. It's 2:30, 9:30, so hour and a half, and we are there. How good's that? And now we've still got we're in bonus land now. We've got 10 minutes until the market composite news that's coming up next, PMI, but we've already hit our TP. As the stream said, the whole goal was to try and hit that $500, and we've done it. Got a whole screen of green, and we're well up for the day, so it's perfect. Perfect. And let's see if we can end it nicely with a win on the composite PMI news and then the oil. So look at that. Look at that trade, you see. NY open. Said it would be the buy. That, and there it is. Hit our breakout, look. Perfectly. Our breakout zone. I was more pessimistic about it hitting that than actually it was, but that was a great result. And gold, look, there you go, look, just coming in now, hitting that TP as well. Look at that. Told you it'd be the sell, reverse. I tell you, trading the fundamentals, I'm not saying you can't go wrong, but you're highly profitable using the volume of the news to gauge the direction of price action. Good old reverse, it doesn't matter now, we're done. Well, like I say, we're about nearly $600 up. So, can't moan at that at all. It's a good day's trading, and we've got a couple left to do as well. So, I'm just going to grab a drink, and I'll be back in 2 minutes, and we'll do the PMI.
More than 1%, the S&P now down a little more than a tenth. The underperformance again coming from information technology, down 0.7%. I want to skip it all and get straight to the panel with Erin Brown, Sri Sankaran and Jay Poloski. And Jay, come to you on this. The underperformance in information technology, the outperformance in the banks, energy, materials on my screen this morning up 0.5%, Jay. It's an early move. It's a flavour of 22 maybe. What is it for you?
Yeah, well, it's nice to see, John, because the last 6 or 9 months have been pretty rough. I mean, all these things peaked back in the spring, right? And we've had what I call a twin engine market, right? When rates go down, growth does well. When rates go up, value does well. We've had a little bit of a rate back up. I think pricing and the fact that Omicron's not going to be very negative for growth. It's actually been a move in real yields, not that's been driving this. And so to me, I mean, we're positioned for this. As you know, we've been a big believer in the cyclical value trade, big believer in non-US equity, big believer in small caps. And I think we've got plenty of room to run. If we have the kind of growth that I expect, again, above average growth, above trend, but declining inflation, that's room for commodities to do well. If we're at peak Fed hawkishness, that means the dollar can roll over. That's good for commodities, good for non-US, good for cyclical, good for value. And history suggests, John, XLE, the energy ETF, was up 3% 2 days in a row. It's done that 18 times before. In the 17 of the 18 times in the next 1 month, it's been up 7%. So the odds are pretty good that we're going to have at least a continuation of this through Q4 earnings. And these segments have a lot of room to run. Any chart you want to pull up of 5-year history, 10-year history of growth versus value, value has been absolutely decimated. Non-US decimated versus US. This could go on, if it's the real turn, it could go on for years.
Energy right now at 1%, financials at 0.4%. Sri, Jay's used that term a couple of times now. I want your view on it. Peak Fed hawkishness before they've even fired a bullet. Sri, really? Your view?
Disagree. I mean, we think that it's kind of still some way away from realizing where the Fed's peak hawkishness is going to be. Clearly, the market's kind of pricing in a bit more of the Fed hawkishness now, but I do think that we are somewhat in uncharted territory with respect to how quickly inflation comes off. And to that extent, I mean, the way we're framing it is that we probably do have to see some degree of hawkishness in the tone with respect to the pace of balance sheet reduction and the market response to that. It's not clear to that that's almost entirely in the price. So that does have a bearing both in terms of the directional view and in terms of our sector calls, both within credit and in equities.
The sector churn right now, fascinating. Information technology down more than 1%. Energy, as I say, up more than 1%. The index overall not doing much at all, down 0.2%. Here's the view from Bank of America. A quote for January. January is typically the seasonally strongest month for US equity flows, with financials seeing the biggest average of the 11 sectors. Energy and industrials have also notably seen positive average inflows this month, while negative flows for all other months. I want to come to you on this, Aaron Brown. Just this view on this big churn we're seeing for the first 3 days, the first 3 trading sessions of 22.
Yeah, so first, I would never extrapolate too much from trading flows that you're seeing in January into the rest of the year. Typically, you see January be a month of reversal. So whatever worked really well into the end of the prior year, you usually see a little bit of a reversal in early January. And I think that's what we're seeing now. Certainly, the yield curve steepening is helping the value segment of the equity market. And I would expect that if you continue to see a little bit of a steepening of the curve from here, you will see value outperform and growth, which is considered a longer duration equity asset, underperform. But I think as we move through the course of this year, I wouldn't bet against technology. I do think that taking a barbell approach to the way that you're investing, so being long segments of the tech market on one part of your portfolio, and then also being long select cyclical sectors that have underperformed and are relatively well set up for the duration of this year, probably is the best portfolio construction. But I do think that in this environment where there is going to be higher volatility, there is going to be more uncertainty, tech, I think, will continue to do well in that environment. And so I really wouldn't read too much into the first few trading days of the year.
Well, on the first 3 trading days of the year, 2 plus today, let's get to Abby for a little bit more. Hey, Abby.
Hey, John. Yeah, let's give a little color to what we're talking about relative to this rotation. And it's pretty profound. Over the last 3 trading days, there is a wide spread between value and growth. In fact, the largest going back to 1995, the Russell 1000 Value Index over the last 3 days up 1.7%. Growth, on the other hand, down 1.3%. So as this trading day has gotten going, the spread is even wider. So folks really going into that value and cyclical trade. Not surprisingly, the NASDAQ 100 yesterday having a very rough day. Today, once again, down more than 1%.
And we're back. We're back. Oh, did so well. I'm having my celebratory cheesy nachos. Why not? Trader's dream. Oh, beautiful. Well, we're doing well. We're doing well. So let's have a
very interesting. Last year, the top sector was energy.
look at where we are. We've got 3 minutes to go for the composite news. Obviously predicted to be a lot worse than the previous month, but we'll see. I have this feeling it's going to be better. We're going on US30 on this one. You can go on gold if you want and go the opposite way. I'm going to go on 30. There we go. Look at these spikes. Look at this. It's beautiful. The market just does not know what to do.
When the index has done so well for 3 straight years, in fact, make it more than that. But
let's put this on here.
Well, it certainly will be, John, if this year we see this move carry through, right? The last
see if that is going to spike back up to here again for the market PMI, if it's good.
Because of Omicron and Delta and COVID not going away. If we're moving from pandemic to endemic, then I think the chances of this being sustained is quite significant. And look, I would, from a global macro asset allocation perspective, my outlook for 2021 was entitled The Golden Age for Asset Allocation. And last year was a fantastic year for global macro.
Excuse me, we'll have a nacho while we wait to trade. This is the life. Trading and cheesy nachos and coffee. Doesn't get any better.
20%. So active stock picking, I think, is a challenge and will continue to be a challenge because the way of market structure. But from a
2 minutes to wait.
allocation, global macro, ETF-based approach, I think the opportunities are just fantastic.
Gold was great. Look at that.
In the US,
There was a spike down for the sell. Hit our TP. Bang. Goes the opposite way. Perfect. Doesn't matter. Our analysis was spot on for the open.
And then I think the really big interest.
And if you wanted, you could have got in on a buy now. While I was downstairs and took it to the breakout zone. Could have grabbed another easy 100 points again. Damn, missed it. Oh well. There'll be more. Look at US30 ranging around. This is great. Some spikes.
Jay, that thought is interesting to me because given everything else you've just said over the last 38 minutes or so, that's not where I'd expect you to be. Some of those US big growth tech names, as opposed to the conversation we've had about international, Japan, Europe, China.
Well, I think, look, I mean, real yields are going to be the key here. I don't think we talk enough about real yields. Real yields, even after if the Fed...
That's like a 300 pip spike.
Real yields are still going to be negative. So I expect big cap tech in the U.S. to be an underperformer. It underperformed versus energy in 2021. Energy
logged in.
The tech performance last year. No one talks about it. But where I see tech is as an anchor to U.S. performance. The markets that don't have big tech, well,
Love seeing that. Manipulation. Everyone's confused.
Are not the big cap tech names. Many of them are not in the indices, and they've been trashed, and that's why no one pays attention to them. I think there could be an opportunity there.
Hopefully the PMI news will take it in one direction.
And if I'm right, that as we go out of COVID, we enter this age of
Here we go.
age of disruption.
20 seconds. Good luck, everybody.
How much has changed and will change in the years ahead? I think that gives that
10 seconds
of the market an opportunity. And if you're looking for alpha, that's where I think you can probably find it over the course of 2022 and 2023.
Aaron, this is seasonal. It's that time of the year where I ask active managers the importance of active management. Can we talk about the importance of active management as an active manager? Aaron, how important is that going to be this year?
Better than expected.
So this is something that Jay and
As we said.
agree on. I think, many of the
Let's see.
just made, I actually concur entirely. I think that active management is important and can generate consistent alpha if you
Ranging around.
correctly. I think that we've seen equity, sort of equity stock picking be challenged over the last decade or so, but we have been able to see in select pockets of the market, like asset allocation, like bond investing.
We're done. Yay! Here we go. 2 buys. Beautiful.
Consistent outperformance from
We got
ability to generate alpha from active management, and so I think that
$65.
done properly, and if managers
Got
correctly, I think
£40. $65 on that. Perfect. In and out. Not messing around. Already hit our TP. These are just bonus trades.
On the active versus passive story, because from a credit perspective, it's different. So as you pointed out, the downgraded default forecast from you and the team at Morgan Stanley remain really, really muted. The earnings outlook has been fantastic. Leverage has come down because of it. But Sri, I want to understand from your standpoint whether these corporations, these C-suites, the companies you follow every day, can remain as disciplined as they have over the last year.
I mean, to some extent, I do
Great scalping by the team.
will remain intact. It is going to be a slower unwind into the more.
This is going to pull up. I mean, you just wait for that RSI to come out that and go green, and you can buy again.
Credit markets, John, is the fact that, well, you're not really getting paid to make that more aggressive or bullish bet. But spreads where they are.
Just got to get straight in on the result. What did gold do?
I do think that this is
Gold pulled back from that resistance zone, so it could be it will be a sell on gold. We're down to here.
Is being a bit more nuanced and getting the credit selection right. So to the earlier debate, I do think that there is going to be more value add through active management on the credit side as well. And more specifically, we do think that there's probably a bit of
It breaks that trend line. This could be a good sell.
Quality growth sensitive pockets within the high yield market probably need to decompress a little bit before you can say that, well, the fundamentals are by and large more reasonably in the price. Right now, it's almost as if valuations are leading the fundamentals as things stand now.
Sri, thank you, buddy. Fantastic to catch up with you. Brilliant panel today. Sri Sankaran, Jay Poloski, Aaron Brown, with some real skin in the game too. Your equity market about 12 minutes into the session looks a little something like this. We're down 1/10 of 1% on the S&P. Energy outperforming at 1.4%. Information technology near the bottom of the pile, down 0.8 of 1%. Coming up, President Biden's economic agenda remaining stuck on pause.
Look at that.
The president absolutely wants to get Build Back Better done, so he absolutely wants to see an extension of the child tax credit.
Just wait for the RSI. The manipulation.
Up next from New York, this is Bloomberg.
Wait for it to swing back in. Take the buys. This is all manipulation BS. We know that. Then the gold. Move the TP up to here now. Look. Keep watching. Keep watching.
Protesters breached the Capitol.
Democracy has prevailed.
Flash mobs decided to take on the shore.
Giant container ship blocking the Suez Canal. 1,000 new types of crypto coins. Crackdown on tech in China. The billionaire space race.
The Delta variant of the COVID virus.
Evergrande is the most heavily indebted developer.
U.S. forces from Afghanistan.
We did not get everybody out. Songs, you're loud.
Rising energy prices.
In Europe, it's a huge crisis.
The Omicron variant has triggered a global...
Just wait.
It's almost the end of the year, but Bali is still quiet and empty. I am here in Kuta Legian, one of the main walking streets here that is used to be a tourist spot for beach, dinings, shopping, but many shops here are still closed. Most of the outlets are in...
Got no positions open at the moment because we're just waiting to see.
Saya kerjanya di sini udah lama.
Just wait for US30 to mess around.
Di sini kerja. Masih sepi sih, nggak kayak dulu. Kalau dulu kan rame. Sekarang ya ada, 1-2 itu ada. Tapi nggak kayak dulu. Kalau dulu
Loads of support.
sekali. Sekarang paling jualan ya 100, 120 gitu. 200 ya. Kalau dulu
There can be your TP now.
1 juta, 1,5 itu nyampe dapat jualan. Bisa sampai 2 juta dulu. Sekarang nggak pernah lagi dapat segitu. Sama aja. Belum ada turis ke Bali.
You pull back.
Masih ya domestik aja. While Bali has reopened its borders for foreign tourists since October, they're still not coming in. Many international airlines are yet to reinstate their direct flight to the island. Balinese people here really hope they can see more people
push up.
from Australia, China and Europe to come visit next year.
A lot's happening on Wall Street.
It's the basic law of
If it breaks that zone.
That is telling us this is transitory.
Need to catch up?
This is Bloomberg Wall Street Week. I'm David Weston.
We've got the information and insight.
This is it now until the oil news.
From businesses
Our favourite.
influential and instrumental.
And that's the way you run good risk management.
Look at it. Look at US30. Look at that. Did I not tell you? I said it would. There you go. Look.
All weekend on Bloomberg Television and Radio.
Pushing up.
Off the floor, the negotiations will continue with members of our caucus and with the White House on finding a path forward on Build Back Better. As I mentioned before Christmas, I intend to hold a vote in the Senate on BBB, and we'll keep voting.
Perfect. Told you to get back in again.
But as you know, Senator Joe Manchin derailing the majority leader's plans, keeping President Biden's agenda on hold, with negotiations yet
Brilliant.
to start. This coming amid talks of more...
They got another £25, another about $40 there. Brilliant. And that's me done on that. Don't need to risk any more. We've done really, really good. We're over $600.
Urgent threats to public health and economic recovery. I want to get to Bloomberg's Anne-Marie Horden on this. And Anne-Marie, I think it's really important to get away from the lead paragraph in the Washington Post and get to the next paragraph. This is going to be targeted at businesses and not individuals.
Perfect
Yes,
scalping.
that's right, Jonathan. Businesses, sporting arenas, places, venues to go out and watch concerts.
Told you all to wait.
Minor league sports teams. And I actually didn't even realize in America there's 120 minor league baseball teams. And the owner of the Dayton team has said that since the onset of COVID, those teams have lost more than $800 million. And he's been working the phones in Congress to try to get some relief to those businesses. So you do see potentially both sides
Perfect, look at that.
maybe coming together. We should
Zach, as I said, hit up. It's in our resistance, but it's blitzed our TP.
to get to the 60 vote threshold, Jonathan.
Gold hasn't done anything yet. Like I say, you don't want to be taking a sell yet. You want to wait in again for the RSI.
So some may feel a little bit worried to vote for that, especially in a midterm election year, because
So,
that money might add to the deficit.
yeah, might not trade that. This could be my next trade if I do. At the moment, I'm going to be focusing now on oil. Let's set up oil. Because we are 30 minutes away from our last trade of the day. And we can add up exactly what we've achieved. Oil news up next to end the day.
Especially when you had Dr. Anthony Fauci over the weekend saying there's likely going to be a testing component off of that new CDC guideline that you can isolate for 5 days only. The remainder of the 5 days, if you go out in public, you must wear a mask. We don't want you to travel, no go to the restaurant. But the CDC guideline says if you can access a test, have access to a test, want to test, feel like it, then do it. But that doesn't really exude any confidence in me as an American citizen walking around that maybe my fellow neighbor actually took a test on the 5th day. It's very confusing, and I imagine there's going to be a lot more questions, and the CDC will probably have to come out with more recommendations.
Anne-Marie, thank you. AMH down in DC. If you've not been following this too closely, the isolation period started at 10. In fact, it started at 14, if you remember at the beginning of this mess. It's come down from 10. It's come down to 5. They got a ton of pushback over the last week about maybe needing to test to exit the isolation. Here's the quote, a direct quote from the CDC. If an individual has access to a test,
Watch gold, just in case we can get a cheeky sell moment. It's very bullish. I mean, it's 78%. We should have had a re-enter for a buy here.
If they want to, I'm sure many of you do, you can. And maybe you should use an antigen test towards the end of the 5-day isolation period.
So we know what we're waiting for to see the price action dip, RSI dip before you sell. But you had this hidden divergence again. Look at that, how spot on that was. From there, count 1, 2, 3, 4, 5. 5 candles, look, and you've been in again. Now it's just backed off out of the zone. It's trapped between this, so it's a risky because it's a you know, you're caught between two zones. Look, but still 100 points can be had on the sell on gold, but not yet.
Not much changing in terms of.
Say we're only 34 minutes away from oil. Here's a setup for oil. As we know, oil has just been after the OPEC news.
484 was the forecast. Now we're looking to see some people raise those forecasts because the ADP number came in so strong at 807,000. And maybe we saw in the month of December a little window between Delta and Omicron where people started to go back to work. That would be exactly what the Fed wants to see.
There you go.
Looking at some of those estimates, and my thank you. Top of the pile, Ian Shepherdson of Pantheon Macroeconomics is looking for $1 million this Friday. 424 the median, the high's $1 million, the low's 150. Ian Shepherdson looking for $1 million this Friday. Want to look for going into payrolls. Let's get you some sector prices.
That's what I'm looking for, 1 million.
John, you won't be surprised to hear that I am going to hit the rotation hard because, of course, that is the story. If we take a look at the IMAP, we are going to see the top sector once again, energy, up in sympathy with oil. Also, the sentiment of wanting to go into cyclical value. You also have materials and
yep, oil could fly. It's at $78 a barrel now, and depending on this news.
You also have tech and discretionary and the consumer services right about even.
RSI, look how many buys you could have got on oil today. This is amazing. You know, it's you just got to pick one thing and scalp it. I mean, yeah, I would have got in here. I'd have got in here. I'd have got in
and then you have tech lower.
There.
You also have the same story as
I'd have got in
China tech
there.
lower, down more than 3%.
I'd have gone in again.
Just taking a look at the tech sector on the month, again, understanding that we're
and then I'd have gone in again.
This 1% decline that we have for the month holds, John. It'll be the worst
could have had already
tech going back to
half a dozen trades.
this strong rotation
all winners,
so early and young.
all 100
Abby, fantastic,
pointers.
Thank you. Can we just get that graphic, that visual back up on the screen? Year to date, as Abby stressed, it's 3 days. The performance you've seen in energy in just 3 days, 8.3%.
Look at that.
And the financials, if you strip it down and just do the banks, more cleanly, just do the banks, we're up even more than that. The financials right now are more than 4%. Some of it is supported by what we're seeing in the bond market again this morning. Yields higher by 2 basis points on 2s to 78 right now on 10s, up about a basis point to 165. The price action early in the year. Up next, your trading diary. Tons coming through this week, including payrolls this Friday. From New York City, this is Bloomberg.
Yeah, we're going to be there. We know what we're doing. US30, look, see? Hit that, reversed again, that's fine. Now we're just waiting to go back for another buy. This comes up again. And gold, there's your sell, there's your dip on gold right now. You're late into it now, you'll be getting 50 points. Look at that, see? Told you, just had to wait, and there it is. Look, broke the trend line, there's your sell. There's your PMI, TP, hit. Took a few minutes of manipulation, holding your nerve. If you're using a sell from here, when the news came out, there, where's your stop loss going to be? Here. So there's the trade. This site's so simple to follow. Because that's where the news came out, top of that candle here. You either look for a sell, your stop loss would have been, look at that, perfect, just about there. And your TP would have been there. 121, look, there you go, look, it's hit it. And you wouldn't have been stopped out. Perfect, perfect trade. And easy to follow. You know, if you're walking away from the chart and setting a stop loss tool like this, or you're just watching the charts like I do. Obviously, if I saw it broke this line, I'd be out anyway, but there's your price action. Look at that. Coming down. Just as I said. TP hit now. A good sell on gold.
Minutes into the session from New York City this Wednesday morning. Good morning. Here's the split, the divide. The S&P 500 down 1/10 of 1%. The underperformance from the Nasdaq, the outperformance from the Russell, the small caps up 2/10. The Nasdaq down 4 or 5/10 of 1%. It's got a flavour of Q1 2021, Q1 22 so far. 3 days in. I know. Don't make too much of this.
Perfect.
So far in just 3 days, at more than 6.5% on the S&P. Switch up the board. Will they get the support from the bond market? Remember last year. The high on a 10-year came at the end of Q1, 177. I talk about that a lot. That story.
Now we're just 30 minutes away from oil.
On the year so far. Today,
All news. So let's just watch. Watch US30. It's looking. No, gold's looking good though.
A number of weeks ago, as we breached 80 in the last week or so. That's the bond market. The price action going into payrolls on Friday. Some Fed minutes too. Let's whip through the trading diary.
Just get ready for oil.
White House COVID response team holding a news conference at 11 Eastern.
We're in and out. Yes, we're done. Woohoo! Got 2 sales on gold there, and we've got 22 and 15. So 30, 40 pound, about $55 there in what? 5 seconds? No fucking around. No messing around.
New York City. Thank you for choosing Bloomberg TV. This was the countdown to the open. This is Bloomberg.
In and out on that gold move. Perfect. That. Had to get in, and I knew it was going to wick down, at least touch our points of interest, which was 5 pips. That's all I need for $50. Perfect. My target, remember, was $500 for this live stream, and as in all my other live streams, we've delivered the goods. and we're all green today. There's been no messing around, no red, no losses. I'll add it all up at the end of the stream anyway. Like I say, we're just going to wait for the I mean, again, there's a sell here coming. If this goes red and price action breaks our points of interest, you know you've got this zone to scalp now. You can adjust the TP down to there, the potential. So again, for those of you who like trading gold, this is a fine example of how to do it. From there to there, look, you've got again 100 points, 10 pips, perfect.
Why not use the test strategically?
This is true scalping in action.
How are we using them? A child is diagnosed with COVID in a classroom. We give that entire classroom
It's trying.
test kits so their parents can test them. So we can determine
Watch this while we're waiting for the oil news.
or just a classroom, or what we should do with that particular area. What has happened in the past, you had one diagnosis, we want to close the entire school. That just makes no sense. Instead of using our resources in a strategic fashion, the science has shown just because one child has COVID in the classroom doesn't mean the entire school or the classroom is infected. We're going to be smarter, and we're going to pivot, and most importantly, we're going to defeat COVID.
Fine. In that neutral zone, you just got to wait.
Months after Hurricane Maria, Puerto Rico is still in peril. Huge swaths of the island are still without power, running water, or access to medical care. Experts estimate that it will take years before these services are restored island-wide. Much of the blame has been placed on FEMA for a slow response in comparison to recent disasters on the mainland. But recovery from a disaster of this complexity and scale has proven more challenging than anyone anticipated. And filling the gaps between an overextended public sector
At gold, there's your sell. Look on gold, perfect. Same again. They're both in the zone now. So there's US30 breaking. Oil, like I say, is still maintaining, just trapped in that zone. Was waiting. We've had some divergence up here, which is an interesting sign. No drop yet, could be the news that dictates it. So we're just 20 minutes away or so from the news, final trades of the day. We'd love to end with a oil trade.
Damaged cell phone towers in New Orleans after Hurricane Katrina. Some might be tempted to label him a disaster capitalist, seeking lucrative government contracts for his expertise. But as Anderson finds himself in the middle of a humanitarian crisis, he and his associates are developing a variety of pro bono recovery projects that target the island's hardest hit areas.
I see two Puerto Ricos. We're here in San Juan. They have telecommunications restored. They may or may not have power, but basic services are in place. They're able to get food. They're able to buy things. They're surviving. And when you look outside of the San Juan area, you can go 15 minutes from here and find areas that are devastated. I'm working on the devastated side.
Today, he's put together a boots-on-the-ground mission to provide medical care to some of the island's most isolated and vulnerable residents. Steve Berenbaum is one of Anderson's business associates. He offered an extra car and a set of hands.
So we received an initial report from a nurse that was out in the area. We're headed to the northeast region of Utuado for some people that are in need of urgent medical assistance.
Dr. Sally Priester is a physician from San Juan. She filled a van with medical supplies at her own expense and brought along a team of nurses. Google Maps estimated our first destination to be a 90-minute drive. But it didn't account for obstacles like this. Our first stop was the home of an 82-year-old blind Vietnam veteran. His roof was blown off by the storm, and he's been living alone in a back shed for nearly 2 months.
His cane actually got broken in the storm, so he's limited mobility. He has a number of medical ailments. Dr. Priester's having a look at him.
Red 43, there's the zone, look at that.
The VA, they're going to get him set up with what he needs, get him stabilized so he can then be transported either to an evacuation center or off the island. It's when the chain gets broken, when those families that are connected to them leave the island or take off, these guys get left at the end of the road, and it's tough.
FEMA was not officially part of Robert's team, and their arrival caught everyone by surprise. Their job here was to survey and report back to their superiors, and did not come with medical aid of any kind.
See if it breaks that zone, comes down.
There to hand out bottles of water. It's not what they do. FEMA has a role to play. They have a very specific
Nice and volatile at the moment, moving.
Airplanes, they bring in tractor trailers with pallets of things, but they're a big machine, and there's gaps in that thing, and you're seeing one of the gaps here, and we help fill that role.
Well, done. Got 2 more trades there. 2 more. What do we get? 32, 28 and 8. Yeah, cheeky little scalps. Could have held, but like I say, I'm not. These are bonus trades. These are micro bonus scalps I jump onto. Because I'm waiting for the other news.
I'm lucky enough to be able to communicate with folks in Puerto Rico.
For a ghost, Robert makes his presence well known. Not only was he the de facto,
That's another $40
now with FEMA in tow, he created his own
on that drop.
storm damage.
Why did I get in on it? Why did I get on there? Because RSI broke our neutral zone. Price action was perfect. Candle was in between 2 zones. And here's your TP that it's about to hit. Yeah, I could have held it, but I got $40. That's all I need. They're kind of perfect scalps, perfect bonus scalps are outside the news events by trading price action and also looking at the pattern, which is a, you know, not a double top, but it's trying to be a head and shoulders, so it's going to go up and come back down again. So the perfect, and it's hitting our TP now. Look at that, RSI 39, perfect. Could have got more, so what? I got what I needed out of the market. I've already hit my target for the day and well over it, so there you go. Gold was a winner. Played really well today. And now we're just going to focus on oil for the last trade of the day. And like I say, we're 90 minutes away from oil, so we'll just keep an eye on this while I just drink my coffee. Bloomberg's going to come back on with things to watch in a minute. We'll watch that. Have a look what investing.com is saying. In.
You can see San Juan from here, but you can't.
Wall Street opens mostly after strong ADP report. Crazy. Not for us. We took the buy. We won on the buys.
On this stop, we caught word that a man living alone at the edge of the jungle was in need of care.
So we decided to take a little detour, come up here and check out and see what's going on. One of the challenges is to find those people that are at the
Crazy. We saw it go up. We saw it buy on our 3-minute time frame compared to their bigger picture. This is the whole thing about how you've got to you know, check out the news and don't read. Don't believe everything you read. Omicron blame for it. A poor record predicting the payrolls. It's a different way they work it out, but it still is a key indicator and a good thing to trade, as we're saying. It's a funny time it comes out as well. 8:15 my time. It's good to read all this, take it all on board, and you know, again, it gives you an idea of which news events to trade, which ones to leave alone, and how they work manipulate the market right way or the wrong way, you know. And again, that's all things I try and teach in the group.
Whether out of altruism or the lure of a paid gig or some mixture of the two, Anderson hopes to stay here to help shape Puerto Rico's...
So we're going to try and load up for the last couple of trades. I'm just going to load up oil on my chart. Ooh, go. And oil's pushing 78, it's nearly $79 now, is it? Look, it is, yeah, look at this.
Continue in the way that it's always been, or Puerto Rico can rebuild itself like nothing that's ever been.
You could be on a trade now, but I'm not. Because I'm having my coffee.
That's the bottom line.
Been buying oil right now, look at that. Perfect. Oil again pushing nicely. X. Moves quite flat. Remember, we just remember oil will take the US in the opposite direction. We trade this every week. We'll be used to how we trade it now, but either higher than expected figure is negative for the dollar, and lower is better. But for us, we go again. Gold usually should be with the news, as well as oil. Or Texas, I trade. Do Brent, but I do WTI. So, if you're trading a dollar pair, then obviously it's going to be negative. Well, it's meant to be negative for the dollar. So, a reversal on gold trade. But we trade just WTI. See here on the time frame. Waiting, 14, 15 minutes to go. Taking any other trades in between now, because like I say, we've done our bit today. We've done 24, 25 trades. Top of my drink, 1 second, back in a sec.
I met him first online, I found him to be really sweet. I think I was the one who was talking for an hour. He was just listening.
When we met, I saw her. She was beautiful, intelligent, and kind, which was, I mean, something that I was looking for.
Anshu and Sumit are one of about 12 million couples that get married in India every year. Unlike their parents' generation, they're not from two close villages, but from two cities on opposite sides of the country. And their love didn't start through community matchmaking, marriage brokers, or classified ads in newspapers, but began online.
So we met through jeevansati.com. So it's basically an online portal where we have detailed profile of different grooms and brides.
It makes a lot of remote profiles who are located in distant areas more accessible.
Thanks to growing internet and smartphone usage, matrimony websites and apps in India are starting to disrupt the matchmaking industry. More and more people are finding their partners at the click of a mouse. jeevansati.com, where Anshu and Sumit met, is one of the biggest players. Young Indians looking for love set up profiles including their caste and horoscope, but their criteria for choosing spouses appears to be changing.
We have seen the shift from traditional caste community conservative parameters to something like which is more focused on education, employment.
Anshu and Sumit's marriage was initiated by their parents, but modern Indian couples like them have more input than previous generations.
We looked up to them to agree for the proposal, but it was primarily our decision that we wanted to be with each other.
So what's the emoji like you use the most to send to each other?
So there's a bear which basically we use for indicating a hug.
Yeah, that's our language basically, bear icon for a hug.
Time flies when you're in love, and just 1.5 months after they first met online, the couple got engaged. They decided to hold their wedding less than 3 months later. But planning a traditional Hindu wedding on such short notice is no easy task. The massive event usually lasts 3 days, has various ceremonies and celebrations, and involves the entire two families and hundreds of guests. Luckily, there are websites and apps for that.
We searched online, we got in touch with Wedding Brigade, and they helped us finalize the venue, and it makes the search faster and efficient.
Startups like the Wedding Brigade are challenging traditional wedding planners in this $50 billion industry. It provides various services from booking banquet venues to buying wedding gowns. The website makes money by charging commission from vendors.
People don't want to be limited to what is available around them. They want to know the entire range of options available before making a decision. And now it's easy to find almost everything on one portal.
Right, and we're back. We're back. Took to my drink. Nice bit of coffee in my cafetiere. It's been a nice long stream, this one, but really good. Like I say, we're I'm going to add up my trades and stuff and everything. We're about 7 minutes away from trading the oil, our final trade of the day, and then later on I'll probably do a bit of an Asian setup. Have a look at I've not traded the Asian session yet this year, left it alone. It gets a bit weird around Christmas time, so might have a look later on at some Asian setups because we love trading the Chinese 50, Hong Kong 50, Aussie 200, Nikkei. So might have a quick look at that. We had some good success with it last year. It's the only trades I've ever set pending orders on, because I don't usually do that. Obviously because I have to sleep. So I don't want to, I need to have a stop loss put in place, unfortunately, as much as I hate stop losses. So, gold was 500, wasn't it? Adding it all up. While waiting for the countdown on the news, the oil news. But yeah, it's been nice couple of days to start the year off with. through scalping, which is always nice to get off to a good start. You never know when the bad day is going to come. You do have them, of course, like everybody. But the more green you can build up, the more of a buffer you have got. But we hope we don't even have to do that. So, right. So I'm just looking from started trading at 1 PM, 1:15 my time. Sorry, 8 AM New York time. So I look because we did done one. We've done 22 trades since we did our live stream. Most of them double positions, so it's actually 12 trades, but I double my position. I do 2 trades, just my habit. Say it's wrong, say it's right, I'm not bothered, it's just what I do. And to 2 positions, split my lot size across it, and that's it. And that's just, I'm not saying that's anything, you know, golden or trickery or whatever. That's just how I scalp. I like to do 2 positions and let them run. So, but that's a good add up what we've made. Because the goal was to do 500 in this live stream, and all my results are posted in my trading group so everyone can see. Rounding it down. This is off. $24.38 was the last one. So £575, $781. That's what we are at the moment. There you go, in profit. So on 24 trades. Burn our target. And so on the countdown, 2 minutes to go. Let's make sure everything's logged in. Broker's logged in. Oil, this is one of our favorite trades. Final trade of the day.
Politician, Warren has branded herself as a champion of the working class and made a career out of standing up to big business.
Altered.
The 2020 presidency bid remains just that.
I'm not running for president.
Her Senate seat is up for re-election in 2018, and Republicans are already pumping millions into super PACs to defeat her. This is the story of how a law professor and politician came to be seen as the biggest threat to Republican values and the greatest hope for progressive America. Elizabeth Warren was born Elizabeth Ann Herron, the youngest of 3 siblings, on June 22, 1949 in Oklahoma City to middle-class parents. After After waiting tables to help her family pay the bills, Warren became a star on the high school
1 minute to go.
She landed a scholarship to George Washington University at the age of 16, but 2 years later dropped out to marry her high school sweetheart, Jim Warren. By 1980, Warren was a mother of two, divorced and remarried, had earned a bachelor's degree from the University of Houston, a juris degree from Rutgers, and practicing law in New Jersey. Warren then went on to become an influential law professor, teaching, lecturing, and publishing highly cited work on bankruptcy and commercial law at 7 universities around the country, eventually settling at Harvard Law School. But Warren wasn't always a liberal lion.
Elizabeth Warren used to be a Republican, actually.
That's Stephen Dennis.
I'm a Senate reporter for Bloomberg. Around the time that Elizabeth Warren switched parties, she became a fierce opponent of a Republican drive to make it much harder to file for bankruptcy. She fought that for a decade. It ended up passing anyways.
While her efforts ultimately failed, her warning calls were heard in 2008.
30 seconds, countdown.
We're in the midst of a serious financial crisis. Our entire economy is in danger, and without immediate action by Congress, America could slip into a financial panic, and a distressing scenario would unfold.
14 seconds to go. Good luck. Final trade of the stream.
Warren was tapped to help with oversight in the government bailout.
She would excoriate bankers and their bonuses and their practices.
Why should the U.S. taxpayer
Go. Oh, it's gapped. Beautiful. Gap down on the oil.
She proposed a series of tough regulations, which became the basis for
Beautiful.
the Dodd-Frank
Look at this.
law that we have today. That sort of catapulted her to national stardom, particularly.
Gap down it did. That was a perfect. Oh, the move. Look at that move, that spike. Look at that.
For the U.S. Senate on September 14th, 2011. During the race, her opponent Scott Brown tried to derail Warren by accusing her of falsely claiming Native American heritage, a controversy that earned her the nickname Pocahontas. Nevertheless, she was victorious and won the Senate seat by a comfortable margin. She used her new tenure to challenge everyone, from banking regulators and Treasury officials to members of Wall Street and Congress.
I'm really concerned that too big to fail has become too big for trial. We need tough new laws to hold corporate executives personally accountable. No one should be above the law.
She called for Wells Fargo CEO
Spreads are crazy.
for fraud, introduced the Bank on Student Loans Fairness Act, and reintroduced the 21st Century Glass-Steagall Act. In 2016, after staying silent during the Democratic primary battle, Warren finally endorsed Hillary Clinton and had some harsh
Worse than expected, you see.
Donald Trump is a loud, nasty, thin-skinned fraud who has never risked anything for anyone.
It's the gap. Gap down, beautiful. That's why you don't take trades until the news has been announced.
Of the United States.
But she was wrong.
The forgotten men and women of our country will be forgotten.
Because you'll get gapped out.
Wasted no time resisting Trump's
Managed or overseen a $1 trillion loan program?
I have not.
How about a $1 billion loan program?
I have not.
In the Donald Trump era, Elizabeth Warren
Ah, beautiful. Spike down.
and trying to prevent Donald Trump and his cabinet appointees from rolling back protections that she helped enact.
Warren actually found herself rebuked by Mitch McConnell for reading a letter by Coretta Scott
Looking 100.
Sessions' record on racism.
Announced here, look at that.
She was warned.
300, 400. You only want 100 points.
Explanation. Nevertheless, she persisted.
That moment became something that's on T-shirts.
We're slow moving anyway, so let's see what we get.
And that really galvanized a lot of support for her. It's been very hard for Republicans to get
Ranging around all over the place. Perfect.
at least in part to
I closed a trade out on it. I got $25 on that. Well, wait to see what happens. Took the sell.
Dollars are being funneled to defeat Warren in the midterm elections in 2018. But it's the rumors of a 2020 presidential bid that has further prompted powerful donors to front her opposition, often using the same playbook of constant and ruthless.
Posted that. Got straight in. Took the green. Put the green on the screen. Now I want the red on the screen. Ideally, look at this. Look at it drop. Go.
whether she can go from being a liberal firebrand to somebody who can regularly
let's see if we can get some more, and then we'll end the stream. Making red.
She can bring together coalitions for political victories. That's the challenge, and we'll see what happens.
Gonna push down a bit more. Flicking, it's thinking about it. Thinking about it. We're done. Yay, I'm out. That's it. There you go, hit our line. Perfect. Well, that's a full 100% winning day. Don't get them very often, but there you go. Took 3 more. There you go. So that was another 30, 60, 69, $140 there. Bang. All done, as I said. Great sell on the bad news. Another 100 back. So this has been a great day. So we're $921. So finished. Perfect, look at that drop. Perfect, look at that drop. I reversed backwards, no matter we set our TP, we took it. So it just shows you there, the news worse than expected. Quite a lot, million barrels. We nailed it. So like I say, that's 30 trades for the day, all green. We've bagged over $900 since we've been live in 2 hours. 30 minutes, so it's been a good long live stream, but just shows you what you can do, the power of the Axe trading system along with trading fundamentals, which we love trading. Fundamental traders in TA, the guide us in and out of our boutique Axe trading system here helps us. So again, if you want to know how to join our group and get access to this and me as your mentor, go to www.mohawkforex.com. All the information is on there, or in the stream information below on the YouTube channel. But thanks to everyone again, thanks to the team who have been in the background trading alongside me, had some good wins. We've had account growths of between 10 and 20% today for a lot of people. So, you know, feel free, withdraw your money, put it in the bank. reset it back to that level and go again tomorrow. That's how you do it. That's how you earn the living from it. You know, you don't have to always compound your account. You know, get comfortable at a certain level. That's what you need to do. So, but thank you for trading all the news events today. It's been fantastic being with you live. Hope more people will get the benefit from this and want to join our group as we continue to scalp, true scalp more in 2022. And obviously I'll be back live on Friday for our favourite news day, NFP, and we'll have all the analysis, charts and everything, and hopefully a bag of pips as well. So until then, trade safe all, and see you on the other side. Take care.